All right, welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day out there as always. And yes, we're gonna have a guest speaker come on later throughout the show, and I think he said he's gonna come at 10 o'clock. So until then, we're gonna do a bit more structured Q&A type as always with you guys. So you guys can ask away, pretty much get started on whatever kind of topic you guys want. But we do have at least two topics that I do want to cover. I think I'm going to wait for the Tesla one when Jay comes on. But yes, so how's everyone doing today? Because I see someone's already commenting Nagi. Yes, it is Nagi. So the first thing that I kind of want to go over with everyone is, yes, Tesla, which again, we're going to save for Jay, but we'll talk about it a little bit here. But Tesla stock has come down on the news as of Sunday, because we were actually talking about that on the call, that the delivery numbers did not come out as expected. So we did see a drawdown. I think it was, what was it, like about 10-ish%, something like that, something crazy. I am a machine. No, I am not. But ARK is a superior ETF. Yes, for those of you who were on the Strongman live stream, you guys saw me having fun there. um, oh, I didn't get to yet. No, because I've been working all day, and then I got off work recently and just came on here. But I came onto the Discord. I saw that you posted something there. I'll take a look at it. Actually, I'm gonna pull it up right here next to me. Let me see. Let me put it here. I think you posted it. What channel? I saw you posted it, but what channel was it in again? I forgot what channel. Is it Investing Discussions? I think it might have been in here. Yeah, it is. Yes. Let me see if it's in here. Yeah, just let me know what. Oh, it's in the EM one. Because I did see it. Let me put it here. All right, cool. So now I have it here. So when we get off the stream, I can watch it. All right. So let's see here. Oh, it's pretty good now. It's pretty good. Hit the ground running for this question. Strongman skipped my QLD ETF. Einstein stocks approved max OP compound. Yes. Well, you don't know. Compounding interest, the eighth wonder of the world. Let me have some water too. But I don't know if you guys. Well, I have done another recorded session on the Discord calls, and that is uploading. That was for about, I guess, around 2 hours or so. So, oh, how you doing, Andrew? Well, good thing you caught this one. But yeah, I kind of do a live stream on there, and then I record it, and that should be uploaded. So you guys basically get two of these. That one was a bit more concentrated and structured than this is going to be. This is more of going to be the hangout. You guys can ask questions. I talk to Jay. We hear Jay out. Me and Jay hang out. We talk, and we have a camera in front of our hangout, basically. So more wholesome content, I guess, on that. But yeah, if we're kind of going over it, let me see, because the thing is, what I don't like about this versus OBS is I think the quality is just not as good when I am sharing my screen. So let me see this. That's why I prefer to use OBS. Let's see, present, share screen. Yeah, present screen. All right, and then I can share these. I think I shouldn't do anything above 1080p, because if I do, it's going to look weird for you guys. Capping on OBS, yeah, that I don't get. Is good morning some meme? Oh, someone else saying good morning. Hi, Capital Mindset. I reopened starter position with banks. Did you, Alex? Did you actually see in the? Well, it's not uploaded yet, but I talked about it in the Discord on. Well, we talked about it on the call on Sunday, but on Monday, Wells Fargo. So yeah, Wells Fargo. Because as you guys have been attending, well, when you guys see the video, because the video was recorded yesterday for that call, and those who were on the Sunday call, we spent about an hour talking about Wells Fargo alone. And then Goldman Sachs came out with an upgrade on Wells Fargo on Monday, which kind of echoed a lot of the stuff that we talked about on Sunday. And then we reiterated it on the call on Tuesday. But the Tuesday call was a public Discord one. So, yeah. But good thing you asked that. Oh, and just in case anyone's wondering, this is coconut water, so that's what I'm drinking right now. Get that good vitamins. I'm just kidding, but it is tasty. A bit more on the expensive side, but it is tasty. All right, so let me actually pull this up, and then I can prop this here. and we can pull this up. All right. And we don't need this one. All right, so that should, okay, so if that's how it looks pretty good. All right, so just making sure that it doesn't appear as though, um, what the fuck you want? um, okay, so this is in 1080p. All right, so that's good. All right, so as you can see over the past 5 days, Tesla is down 14.82%. Again, based off of the delivery numbers that we saw, it's funny that we saw the actual presentation on Friday with the robot, and delivery numbers didn't come out as expected. So my delivery did not help out these numbers, I guess. But it is what it is. That's why you shouldn't use anecdotal evidence as a means to kind of determine an investment. But um, yeah, I think with all in all, I mean, again, their capital mindset community hasn't been, very testy on Tesla as other communities have. Like Jay has a guy who apparently attacks him for it, but I don't know. Tesla's always a buy the dip opportunity. That's what it seems like, man. I mean, but I don't know. Then again, year to date, it is still down 39%. So the perception is that it always is, because we kind of remember these dips here, and then it seems to always recover. But I think let's see from here to just before it dipped. Oh, it didn't drag. Come on, Google. 22.8%. Okay, but before we kind of continue, I want to actually talk about Alex's comment, because one thing I don't want to leave you hanging with, why Wells Fargo. So again, a little bit more color will be shed in the recording that is uploading, but it hasn't uploaded yet. And in fact, by me streaming now, I've delayed the upload. So it's about, I think it's a 2-hour long stream. But in there, there's a decently sized segment. I don't think it's as large as Sundays, but decently large segment where I talk about Wells Fargo. Pretty much with that primary dealer, what we're looking at is it's the best positioned for what is to come. The best part about the Wells Fargo, I guess, punishment is it was a blessing in disguise, because what the bank has done over the past couple of years has really shored up the balance sheet, really cleaned it up. The CEO has done a fantastic job at doing that. Now, the question kind of becomes, when does that asset cap get lifted? But if it does, they are pretty much the best position to kind of take the good assets or grow in certain verticals that other banks just won't be able to. And you also could have looked at the stress test data that recently came out, and Wells Fargo actually performed the best of the big four banks. So yes, here we go. Still, yeah. Cool. Cole, if you want the link, I can send you the link. So this is not a subscriber live stream, but that will probably, if I do one, it's going to be on Saturday. Well, not this Saturday, because my wife and I are heading out. So my God, Thigh CEO. Oh, the CEO. Yeah. That's the good part about Wells Fargo. So yeah, until Jay Nagy gets on, you guys can pretty much ask any questions, and it's pretty much a Q&A session right now. Double Dino Zuck is clearly on its way. Well, yeah, with Meta, let's take a look at Meta. I mean, Meta hit below 140 last week. Oh no, it's still under 140. Yeah, but Meta already added to the position last week, so I'm not really looking to add. I'm looking to add to other things, which I have, but I'm waiting for the portfolio update video. You guys can probably see there's 2 stocks that haven't been updated yet in the portfolio, so I haven't done a video yet. But they're both in the same broker, and that broker always takes a little bit to pull in. But the other stocks have updated, and there is one other stock that now is on the chopping block for me to probably take profits. That's Cardinal Health. So I was going to talk more about it in the portfolio update video, but I have a big mouth and I'm talking about it now. So Meta is a train wreck. Yeah, yeah, it is. Did you hear Discord LH? Yes. Why do I like LHX? Because I think that they're involved in the fastest growing segments in the defense contract space. That's why. They're heavily invested in different parts of space. So when I spoke to someone who actually works there way back in the day, this was before, and they've actually performed really well since then. So I actually kind of regret myself not buying them, but where I worked, we were involved with purchasing shares of LHX. And what we liked was what they were actually getting involved with in comparison to Lockheed Martin, which, Lockheed Martin has also performed pretty well. But let's actually compare that, because I'm actually curious now, because more recently, Lockheed Martin has performed really well. But let's compare it to LHX over the past 5 years. Actually curious. Yeah, you see, okay. That's what I thought, because L3 Harris, from what I remembered, performed better than Lockheed Martin. Capital Mindset, The Trade Desk, Crowd, Tesla, EMPH, Cost. What would you buy if you had to pick one? Oh, we're playing this game again. So we played this game yesterday on the call, and so I really actually like this game. So The Trade Desk, CrowdStrike, Tesla. Well, I mean, I had to pick one. Like right now. Jeez. Really making it difficult. But wait, hold on. Jay's asking if I sent the link. Yes, I can resend. Oh, I think I did do a video on Comcast. Can someone check for that for me? But I'm pretty sure I did do a video on Comcast. I don't know. Maybe the Trade Desk, or maybe, well, let's see what CrowdStrike's at, because I actually don't remember what CrowdStrike's at recently. CrowdStrike's at 176. Still. Yeah. I'd probably go with the Trade Desk, or Enphase, no, or maybe Costco. Yeah, because I'd probably go with the Trade Desk for me. But yeah, you really, yeah. Oh, you weren't there for the game? Yeah, no. It was a fun game. So people kept asking, like, okay, these are the stocks you have an option to buy in, and it would be whatever they so chose. Fabio, would you love your thoughts on Rolls-Royce? I can do a video on Rolls-Royce. I've done videos that are competitors to Rolls-Royce, but never Rolls-Royce. So let me actually write that down. I like my little notes here. And then if you guys bring up stocks that I'm like, okay, I should probably take a look at that. So Rolls-Royce. Okay. Meet Kevin's ETF or Cole's 1v4 Age of Empires. I forgot. Did he win? I don't know if he won. But if he won, then Cole's Age of Empires. But we'll see, because I don't want to say that and then Meet Kevin actually changes his strategy and actually does something good. I mean, I don't think he's the one doing the strategy. I really don't know what he's doing. I think maybe he is. You see, like, because he said conflicting. Well, not conflicting. I don't know anything about that. So I'll refrain from commentary on that, because I didn't really pay attention too much into it. It was a moral victory. Okay, so if it was a moral victory, I'll go with Cole's Age of Empires, just because I don't know. I don't really like Meet Kevin's picks in the past. We were talking about some of them last night. Like Arkimoto was one of them. Hey, how you doing, Elemental? How you doing? All right, so Jay just texted me that he's joining anytime soon, so we're kind of just waiting for him. And what is his comment about Sage? I don't know what that means, Fuhat. Capital Mindset. I don't see your Comcast in your library, but also dying to. Oh, I haven't updated the library in a long time. I got to actually take the time to update the library. Just look up Capital Mindset Comcast. And if I haven't talked about it, I don't know why. I feel like I might have done so in a live stream. And the problem with live streams is I don't put the titles very good. And I could be talking about anything in the live stream. I was talking with some of you guys about this problem. So yeah, it's bad. Like, the title will be like Capital Mindset Live. And then it's like, okay, what does that even tell me about anything? All right. We have the man, the myth, the legend himself. He
I wish I was a legend.
How you doing, Jay?
Nothing. I got back yesterday from Austin.
How was Austin?
Austin's awesome, man. I tried to get on Kill Tony, but they have like 10 slots and there was over 30 stand-ups there. So it didn't happen for me.
Ah, dang. If you do stand-up in Tampa, in like that area, you should let me know.
Yeah, I have to start. I'm going to start going out again. Yeah, like I really only am going to be able to get like one day in. But I mean, the advantage of that is you can write so much that you just have material to test out. So it just piles up. But I mean, it is what it is, dude.
Yeah. Well, we want to talk about. We're going to start off with Tesla. All
Yeah.
right. Well, first of all, did you make a video on Tesla lately?
Bro, I haven't made a video in a week. I was going to Austin, man. I was just burnt out on making videos. I needed that time off. That vacation helped. There's a lot of stuff I want to talk about now. Because, I mean, I was just doing videos to the point where I was sitting there going, all right, I need a break from this. I was just like, because I'm doing them every day, and I haven't taken time off in like 2 years. I was just like, I'm taking this week off. I have to.
That's kind of, well, I've morphed to just doing videos just basically when I feel like it. That's
I
kind
mean,
of what I'm at.
right now, man, if I'm not monetized, I'm a hobbyist. It's like, look, you're not going to get as many videos from me as somebody who's monetized.
Yeah.
Number one, I don't depend on the income. It'd be nice, but if my channel grew, but the problem is YouTube wants you to do things I don't want to do.
Yeah.
Like it encourages you. I don't mind talking about grifters. I just got bored that, this had become the focus of my channel, and I never wanted it to be that anyways. It's like, there's only so much I can have Jeremy LaFave's and Meet Kevin's idiocy in my head before it becomes, I'm just like, dude, I can't think about this anymore. It's so stupid. It's so bizarre that I'm sitting around, getting attacked for telling you these guys don't know what they're doing and they're going to lose you a lot of money. Stick to index funds.
But people want a 10x.
I know. I want a 10x too. But here's the problem. If I knew what stocks were going to 10x, I wouldn't be doing a YouTube channel because I'd be the richest man on the planet.
Exactly.
It's like, hey man, can you do Yahoo Finance videos? Why? I know which stocks are going to 10x. Right? And if I tell you, then they won't 10x. It's like if you had this magic formula, like, I don't know, you found an equation from God that could predict the intrinsic value of every stock, well, then everybody would know it, and then it wouldn't work.
Yeah, well, we do have a comment, and I think it's Elemental Tamago is kind of referring to what was it? Was it the Chinese company or the other one?
Let
me know.
I don't remember, man. Dude, I don't remember. I believe everything you say, Elemental, but I don't remember.
Well, yeah, there were two companies he was talking to me about yesterday, but one of them was trading at like 10% cash or something like that. But it's the Chinese micro cap and the Wave Power Company. Yeah, Chinese mushroom company and Wave Power Company. Both extreme micro caps that we're not going to put up on the screen.
No, I mean, yeah, and that's also, look, I bring it up all the time, man. I use 5% of my portfolio for speculation. Every stock that I buy is pure speculation, even though I'm doing cash flows on it. So, everybody has to decide how much they're willing to gamble with. But, if you're a young dude and you're like, well, listen, this is straight gambling, I don't see anything wrong with buying the small micro caps.
Well, what are you gambling on recently? What's that 5% going to?
I haven't been buying anything. I thought about buying some Occidental because because I just looked at it, man. It's basically, anything can happen, but we're going into OPEC said they're going to reduce production, and it's trading at a 6 price to earnings ratio. I just did a cursory look, and it looked okay. So. But the problem is, man, I spent so much money on my house this year that I just didn't really have a lot of money to do anything other than put in my 401k.
Oh yeah, people sleep on that. House expenses can be insane when they come up.
Bro, I've spent 15 grand this year.
Yeah.
So basically, because of the house, I would have maxed my my 401k this year, but because of the house, I couldn't. So it's like when you sit there and you go, well, what stocks are you buying? I'm like, I thought about making a speculative bet on Occidental, but I mean, understand, I'm not putting a lot of money into this,
Yeah.
Because like my goal next year, I'm not buying any stocks until I've maxed out that 401k and my Roth IRA.
Now, in your 401k, do they allow you like a self-direction, or you can only pick certain investment vehicles?
You can only pick. I just load up on the S fund and the C fund, the S&P, and then I throw some money into the small cap. This is small caps tend to return more than large caps.
Yeah.
So, I try to juice the performance there, but I mean, you really only have the options of T-bills, bonds, and, the S&P 500. You could do a targeted date fund in there, which is what I usually tell people to do at work when they ask me. They go, hey, man, where should I put my money? I go, put it in a targeted date fund because you just don't have to worry about anything.
Yeah, it's simple, set it, forget it. And I mean, it all depends. Like, I think people kind of sleep on the 401k. For most people, that's going to be a really good vehicle because you got that employer match. Depending on where you're working, because I'm not going to give a blanket statement, but some are better than others. I think some are objectively better than others. But yeah, can you have a 401k? Okay, so this is a question right here. And the answer is yes, you can have all of the above, but there's limitations. And for example, the regular IRA and the Roth IRA both add together to the same limitations. So you can have a Roth IRA and a regular IRA, but the maximum is, it's still the same. So I think the maximum is at 6,500, or is it 6,000? I forget every year.
Off the top of my head, I just know 6,000. And
so
it could have changed. I could be wrong because I haven't read that. I haven't even looked into that in a while, so I could be misremembering it. But I believe it's 6 Gs, and I'm almost positive that the TSP is 20,500 now. That it went up from the 19,500.
Yeah, no, and yes, exactly. This is what I'm talking about. It's not 6K plus 6K.
Yeah, no, I know that. Yeah.
No, just because his question was that.
Yeah, I mean, the government, they want to strike a balance between encouraging you to save, but also, it's like they're not going to let you just put all of your money in a tax advantaged account. And all of the loopholes that you think up as a common person, some dude that's way smarter than you already figured out that would happen.
Mm-hmm. But you still get a decent number of accounts in the United States. You still have your Roth or your regular IRA. You have your 401k, same thing, regular or Roth. And then you also have the HSA, which don't sleep on the HSA too. So I have an HSA, and you got to see, because not all plans allow you to have that HSA, but definitely check out your wherever you are and see if they have that. Definitely do not sleep on that. So that gives you an additional, I think that one's another $3,000, I believe, something like that. But yeah, typically towards the very beginning of the year, I'll try to max out all the accounts that I do have. And then after I'm done, I'll go to my regular accounts.
Yeah, because that was the problem for me coming into this year, man. I knew it was coming up. I mean, last year I was crushing it, but I just knew I had to get these trees down. And then, when I bought the house, there was some stuff that the inspection missed. And the fascia going around one of my roofs over here was rotted. So I had to it cost me like 6 Gs alone on that, plus taking down all these limbs. So I just, like, this year was honestly a mess for me financially. I mean, I still contributed what I could, but that's really why I wasn't buying a lot.
Yeah. Life happens, right?
Because, I mean, and also it just doesn't make sense.
Mm-hmm.
You know what I mean? It was fun to mess around in my taxable brokerage account, but it's not the best move. So, like, for me, if it's like right now, I'll look at it and go, oh, speculative bet. I'll throw it in the portfolio. I just want to see what happens with it.
Yeah. Now, Of those, what are your current speculative bets? Are they the same ones as before?
Yeah.
I think I remember what they were.
Yeah, it's Baba, Bank of New York, which my uncle left me some of that. And I got some Intel in there. But, everybody would tell me to sell Intel, but I'm just curious as how this plays out. I mean, I might, but I just don't think this is the death knell for the company. I think there's going to be like a rough time period coming up for all the chip makers and everybody. And that's another reason why I don't really want to buy anything right now, because I really want to see how the Fed raising interest rates is going to affect the market.
Well, I think you have access to the calls that I have on Sunday. You should definitely take a listen to them when sometimes, but
Yeah.
we can always talk about the topics here, but
Yeah.
because they're recorded and then I upload them for you. But we were actually talking about, I think, a couple of weeks ago at this point now, we were talking about the semi industry and how we were kind of going into, a downward cyclical. Well, actually, no, sorry, that was a couple months ago now, because we have some people who are fairly familiar with the sector.
Mm-hmm.
And so they wanted to have that topic of conversation brought up regarding memory, graphics cards, etc. So we talked. NVIDIA was a topic of conversation. Micron was a topic of conversation. And then more recently, like the past 2 weeks or so, they've been focused, or these calls have been focused on, the bond market specifically. Like, okay, what the heck's going on? Because I think last week there was that whole craze of everyone wanting to talk about what's going on with the EU, et cetera, and all that. Which I didn't really find most people were. They were kind of just doing a lot of, I guess, textbook content on macroeconomics and stuff like that. But yeah, it's an interesting time. I mean, if you see this year, you know what some of the best performing stocks are this year?
No, I don't actually. I do know this. One of my speculative bets, I bought it at 39, and all of everything that's happened, that I forgot to tell you, BTI is still in my portfolio. And and it's like, dude, the reason people don't understand, first off, the reason why I just bought BTI is basically an experiment because of where it was trading. And then I thought to myself, I go, you know what? If the Fed starts raising interest rates, sin stocks tend to take off because we go into a downturned economy.
Yeah.
I bought BTI at 41 or like 39. Something I can't remember the exact price that I first started buying it. Would I honestly recommend somebody else do it? I don't know. This was really just a fun little experiment for me, to be honest.
It's yielding 7.58% now. Are you buying this in your retirement account?
No, that's why, like, honestly, in BTI, I think I have like less than $1,000.
Okay. Because I was.
Yeah, I'm not going to load up my brokerage account. Like I said, like all of these stocks, it's probably not the best way to do it. But like I said, I max my Roth IRA and my 401k, then I'll buy individual stocks. It's just my strategy. It might not work out, but like everything to me is an experiment. It's like, I don't know what's going to happen in the future. I can just make the best educated guess I can. And that's why I say it's speculation money.
Yeah. I mean, well, for me, I like to prioritize it. Like, if I can help it, I try to put all the dividend stocks or stocks that do pay dividends. I'll put them in the retirement account.
Well, that's where they should be.
Yeah, exactly.
Honestly, if you're it's like, I don't know if I ever did the best job explaining it. The 5% of my portfolio that goes to individual stocks is just fun to me.
Okay, the chat is asking me to ask you a question because I think I also want to know the answer too. And do you know of a company called Rick?
No.
Oh, okay. I'm gonna show you Rick. All right, because the chat's gonna love this. All right. We have a Capital Mindset. I was given this stock as a request to analyze by longtime subscribers. And I'll be honest, I actually came into it thinking of it as a joke, and as you will too, once you find out what they own. But come to
Look
find
at the
out,
underlying fundamentals.
like Okay, so I'm up. I bought like a joke position in it, and I think I'm up like 40 something percent, and I've owned it for like a couple months.
Okay.
But and like I should have taken it a lot more seriously. No, but even before then, when I was analyzing this, and I never released the video, so shame on me, guys. I'm very sorry about that. It's uploaded. If I upload it, just note it's a joke video. But when I was actually going through it, and I was a topic of conversation on the Discord, because that's where I actually shared my unfiltered opinions on this, was the company's actually really good at allocating capital. Like they are in a very niche space. Okay, let's just like rip the band-aid off. Okay, so this is the company, Rick Hospitality Holdings. All right, get ready.
I'm
Get ready.
looking at it right now, dude.
Okay, right. Yeah, no. Just go find out. No, I'm not even gonna put this up. Go find out what they own, and then we'll continue the conversation there. Look at this. We have I don't know if that's real, if you're 50%
Offers
Rick, but
live adult entertainment,
oh yeah.
restaurant, and bar options.
Oh yeah.
Also, but dude, I'm looking at this. Okay. 17 price to earnings ratio. When you bought it, it must have been way cheaper. What'd you buy it at?
I bought it in like I think it was the 40s.
No, but I mean, what was the PE then?
Oh, I can't remember, to be honest, but let me actually see, because I can find out from the video when I recorded it, and I'm recording it while it's at the price where basically I bought it at, so I can just find out that way.
This is funny, dude. Somebody told you about this?
Yeah, well, it was asked a lot, and I just never got to it, and I was like, all right, one day I was like, okay, I'm gonna actually take a look at this company. And I like to think of myself as an open-minded person. So I looked through it, and I completely changed my mind, because I don't know, it's the initial perception. And I think that's why a lot of people overlooked this company, which is just funny. It's hilarious. I don't know how else to describe it to you guys, but
bro, I mean, when you look at its EPS, man, over the past 10 years, it's consistent growth. I mean,
yeah,
it's really good. I mean, look, when we're looking at EPS growth, this is the problem a lot of times too with doing YouTube videos, is getting across, man, anything can happen. Like at the time, the stock can look really good. And like when I'm looking at it, it's EPS growth. I mean, you got one major fall off, but then it's right back going up. It's consistent growth for almost 10 years. I mean, that's what you want to see.
So hold on. Oh, I just skipped over it. I'm gonna tell you the multiple. Oh gosh. It was under 15. It was like 14 something. I can't really see it. According back then.
Yeah, no,
Let me see, actually. I'm trying to see it like more clearly, because
36 million.
oh, there it is.
It's
Move up. This is so weird to look at this way. This isn't. Yeah, it's below 14. It's almost 14.
Yeah, dude. That looks like it was a good little buy. I might look more at this stock.
So here's basically the pitch. They're in an industry that no one likes. All right. And so it's them and like another private equity firm that are pretty much the largest owners of clubs across the United States. They also are getting to a sports bar called Bombshell. But basically the CEO, there's only one kind of tiny scandal, but not really a scandal. It's a disclosure issue. It's an honest, it doesn't appear like it was a malicious mistake. It was a lack of disclosure for compensation that wasn't really that much. I think it was like a couple $100,000 over the course of many years. Could just be the CEO just, didn't know to do that, right? He didn't have the proper consultation at the time to do that. But anyways, so he comes into this company, and he finds out that first of all, it's very difficult for you to find a buyer. There's not really many buyers out there. Initially, like you would say, a lot of private entities don't really want to be, like, a lot of partnerships don't want to own this stuff, because they have to kind of explain it to their investors, like, hey, we're going to buy a club. And most people, it's a more scandalous asset class. And so they're there. And when a lot of these club owners want to liquidate, and get out of it to retire, they're there. And the multiples you'll get, which I always tell everyone, in the private markets, not the public markets, you're going to always get way better deals than in the public markets.
Mm-hmm.
So the multiples they were getting at times were sometimes like three times multiple for like a club, maybe less sometimes depending on the market. And when I say market, I mean the time frame, like what time period we're in or what geography we're in. And they over time, you're basically getting a diversified group of clubs, because when you buy one club in one city, it's a lot of risk, and you might be in 1 year, out the other year, etc. So yeah, this is just there.
You know what? This stock is fun, and I'm going to keep it in mind, man.
Yeah.
Like I said, here's the great thing about this stock, dude. We all know this happens every time there's a major recession, right? You have to look at this too. The Fed has never engineered a soft landing when inflation has been above 5%.
Oh, yeah.
So what I'm saying is, I mean, again, which is why I'm kind of sitting back watching the market right now, and I'm going to add this to a watch list, because if I get this for the right price, I might buy it for the sheer comedy of it. And, but what do you think is going to happen, man, in a recession? Sin stocks go up. There's going to be a lot of people drowning their sorrows at the titty club.
I like the way you put that. So a thesis maybe centered around BTI, Altria, all these other stocks is, people go through bad times and then drown their sorrows in this stuff. All right, let's see this one. I'm trying to find here the SEC filings for it. We're going to go on Edgar, and then let's go to the current report. Oh, sorry, not current report. My bad.
10K
report, but I want to go into 10Q. That's what I meant by.
Oh, bro, if you ever go to Austin, right?
Yeah.
You take your wife down to 6th Street.
Yeah, I know about 6th Street.
Dude, it was so much fun, bro. I didn't end up hooking up with anybody, but I got hit on so much. I was so surprised by it. Dude, there was a girl on what was it, Monday night. So I was drinking at the bar because I went, I'm on vacation, man. I'm gonna have some sodas. And dude, we're talking and she's on a date with a guy, and he goes to the bathroom and she goes, "Hey, why don't you take down my phone number real quick?" And I'm like, she goes, "I'm on a first date with that dude. I don't care about him." And I'm like, love, I'm going back to Clearwater tomorrow. But I was sitting there after, I was like shocked. I was just having a conversation. And she goes, "Yeah, no, take down my number. I want to go out with you." And I'm like, wow, this place is awesome.
Yeah, I've heard a lot of stories about 6th Street on Austin. So, gosh, if we go to Austin, we'll definitely visit there.
P. Morton does bring up an excellent point, refuting my point on the booby bar.
But that's you, P. Morton. I don't know. There's some people out there.
That's a way to look at it too, man. I mean, I don't know, man. It's just during economic hardships, man, drinking and smoking goes up because people are stressed out and they want to escape.
Well, just so you know, a lot of the money they do make at these places is from the alcohol.
Oh, that's
the dancers are the ones that make the money from you desiring to drop money on them. Like if you're there and you decide to drop less, maybe they're making less, and then you're just drinking more. I don't know,
bro. Yeah, I mean, you're 100% right. When you look at a bar, when you look at their margins on food, because I know people that own bars and they tell me, they're like, "Dude, I lose money on food. Where I make my money is on booze." And like when I was down on, when I went to Vulcan Gas Company to watch Kill Tony, $9 for a beer. I wanted to eat my own head at that point.
Bro, $9.
$9 for a freaking beer.
Oh, if you ever come where I'm at, there's this really good burger place, but it's like a gourmet burgers and stuff.
Yeah,
It's fantastic, and it has
bro, I love
a
that.
good select taste of liquors. It's
Yeah, I
good.
mean, I'm sitting there and I'm like, bro, I'm drinking a Lone Star because I'm in Texas, and you're charging me $9. It's glorified Miller Lite.
Yeah, yeah. I mean, yeah, they're making bank on that. Well, have you thought about some of the alcohol stocks? Because we have for
No,
the
but I
spirits,
did
we have
get these bad
Diageo.
boys.
Oh, yeah. We have some people from Texas. Some of them are in the chat. I won't oust you, but I know which one you guys are. So
No, dude, Texas is great, man. I have nothing but good things to say about Austin. Like everybody I met in Texas was so polite and nice.
yeah, I heard only good things about Texas. I mean, it's us and them, right?
Yeah, I mean, well, yeah, I mean, but like you'd be surprised. There really wasn't a lot of judgment coming from Florida.
Yeah. Well, I wouldn't be surprised. Yeah. See, someone else is saying, come to Lubbock DP shootouts for $1. Wow.
Come to Lubbock, dude. I love, bro. One thing I want to do at some point is take like 2 weeks and just drive around Texas with some people that I know and just let's go to Lubbock, hang out there, see what it's like.
Yeah. So, I mean, have you looked at any alcohol stocks? Like I was saying, we have Diageo, the spirit company. We have Constellation Brands that own some spirits, some beers. I don't really like their beers. If you like Corona or Modelo, they own the distribution rights to that in the United States. Altria owns 10% of Anheuser-Busch. You also have Anheuser-Busch.
Yeah. Well, I mean, it's like, dude, like I said, man, like basically, I just took a week off. I'm gonna start doing videos tomorrow, but it was when I was down in Austin, man, I was sitting there and I go, you could do some videos now on some stocks, and I go, yeah, I'm just hanging out. It's all
Yeah,
I'm doing.
no, don't do that. Yeah, gotta. There's got to be time for tons of relaxation. Like I said, right now I just do videos kind of when my brain desires it. And because at the end of the day, this is supposed to be fun. It's not supposed to be.
That's what I realized in Texas when I was down there. That is the one thing that going to Kill Tony made me relearn.
Mm.
When I told you I started a new job and I like with whatever my circadian rhythm is screwed up, doing that morning thing over long periods of time turns me into a different person for a while because I'm just so exhausted. And so I wasn't really writing because I couldn't come up with ideas. But when I went to Kill Tony, it's the same thing I would say about YouTube. I go, I started this to have a good time and maybe teach a few people what I know, about the stock market. We can have a good time. Let's buy some stocks, but be safe with your money on top of it and have a process, man. And with all the Lufufu and the Meet Kevin videos, at some point it just stopped being fun to me.
Yeah.
And
Then
so,
stop, yeah.
and even like my writing in comedy changed. And then, I went and saw Kill Tony. I have this entire new bit that I think might turn into something. I don't know whether it'll go a long joke or a quick joke, but you've heard of MAPS, right?
Yes.
Minor attracted persons.
Yeah.
Well,
Yeah.
my joke is me talking about that, but confusing that with actual coal miners.
Oh. What crowd are you going to play that to? Go to Pennsylvania.
I'm going to make you think I'm talking about how I'm disgusted by these people. And then these fucking miners are gross, man. They're covered in soot and they got these little hard hats on. We should be attracted to that. So I don't know if anything will come of that, but I was like, that is a good, just silly joke to get me back in the mood for writing. But yeah, that's what Austin, going down there. I started thinking about YouTube and I was like, bro, you're putting pressure on yourself for no reason. You're not having a good time. just go home and have fun with it.
Yeah. Yeah, you can't let something like this, especially make it so that life is a drag. Because some people take this way too seriously.
Well, some people have to.
And that's what I was about to say. Yeah, they
You
kind of
know,
have to.
look, we talk about dog food, right?
Oh,
Dog food.
yeah.
Because I don't want to mention that guy's name anymore. So he's dog food from now on. But I've shared my thoughts on it. But at the end of the day, it's what Chris said. The dude's desperate. He depends on his YouTube ad revenue to live. The rest of us don't. So, I kind of look at it and I'm like, okay, that dude has to take this serious, but I don't. It's because it was like I had some of his fans calling me a loser and telling me I'll never make it on YouTube. And then they just stopped when I went, oh God, the horror of not becoming a YouTuber that has to say what he thinks other people want to hear because he needs the money. The horror. The horror of me dying in obscurity.
I mean, I don't know. Yeah, it is what it is. But YouTube has been like a dream come true for some people, like the grifter slayers, or sorry, not the grifter slayers, the grifters you were just referring to, kind of.
No, it has, but look, here's the problem and I was thinking about this too, man. Like you look at LaFufu, Meet Kevin, you look at all when those guys came up, even dog food, YouTube changed the algorithm in 2019 to favor larger creators because they changed so Tim Pool often talks about this. 2019, all of a sudden his views drop because they started prioritizing CNN, legacy media, because legacy media went to him and gave him a bunch of money. So getting a big YouTube channel now is harder than when they started. And, when you look at a lot of the people on YouTube and what they say, they go, you got to talk about the topics that are in the news. And I'm like, well, okay, but if I like those topics, they're like, no, you got to go to Google trending and, look at what's trending and talk about that. And I go, listen, here's all that's going to happen if you force me to talk about stuff I don't want to do. My content is just going to get crappier because I don't care. I want to have a good time with it.
Yeah, that's what I was telling some of the subscribers. It's like that the reason why I don't do content on just like the most talked about stocks, that like because retail has obsession with certain stocks. Like it's not unknown to me that if I talk about this stock versus that stock will get a ton more views. I'm talking about orders of magnitude larger.
Oh, Palantir.
Yeah, like for example, that video, like, or it's, you see, like, because there's not, first of all, if you talk about a stock every single day, are you actually just providing value? Of course, like people are voting with the clicks, right? So they're voting because they want to see that, but the value of a company shouldn't be changing on a daily basis.
Well, dude, I agree with you, man. It's like, here's the thing. If you're looking at yeah, okay. But I mean, if you're looking at a stock, what you want to do, man, if you were ideally going to do it for the benefit of other people, you would look at it once a quarter. Okay, I just told you what I thought you should pay for that cash flow. All right, next quarter, we'll look at it again. I mean, that's really what you're supposed to do.
Yeah.
It's like every time the earnings are different. Maybe when you bought a stock, because I mean, it can be as simple as this. You buy Rick. Rick's great, right? Rick runs up.
Rick up.
Yeah. Rick runs up on you. And then you go, guys, when I bought it, it was trading for a good price. Now this quarter, it's not. This isn't where I want to buy it. Yeah. Palantir. I mean, I haven't looked in Palantir in so long. Are they even profitable yet? We don't.
No.
Yeah. So, I mean, and that's the point. It's like, oh, yeah, here, let me talk about Palantir to get subs. I just told you yesterday it was unprofitable and share diluting, and I'm personally not interested in it. If you are, Go for it. I don't want to buy it. And then so I don't want to really talk about it either.
Do you have comments on this?
Yeah. I don't know if you guys watched it, but I did a video on the problem with their software.
I did. I saw that. Yeah.
The problem with their software is, and this is something I pointed out a long time ago, is that they're not the EPS. You shouldn't go from just the current EPS as a buy metric. If you look at the Intelligent Investor, Ben Graham talks about it. You want 10 years average free cash flow. Use your multiples from that. I don't necessarily think it's, I like to use either the 5-year average, or if I see a drop in EPS, I like to look from there.
Well, I know you said that just then, but I want to highlight that you probably haven't seen enough of the videos where they completely change like their methodology of how they come up with anything.
I haven't been watching them in a while. What are they doing now?
I don't watch them, but people who do watch it, they'll share like clips and stuff with like other members, and then on occasion I'll watch it, like the clip that they send, and I'll read the commentary around it, what they're saying about it, and it's I don't know, I don't even know where to begin.
Yeah, I mean, dude, well, we talked about it. We talked about it before, our thoughts on it. You basically broke down everything. We don't need to do that. But yeah, I mean, I liked in Everything Money when they had Seth on there, because the reason why I like them is because at least why I took up for them was because at least they weren't just out there telling people that you just buy a stock and it 10x's. This is just easy money. Oh, you are investing in index funds. That's fine because you don't know anything. But I don't want to wait till I'm 70 to be rich. And I'm like, this is how this works. So, I mean, that's why I liked them. But as they started, something changed along the way where I was like, I'm becoming less and less of a fan of these guys. And then, yeah, I know about that. But then when they got rid of Seth, I was like, you know what, man? And they kept Mo. I was like, Mo doesn't know what he's doing. At least Seth feigns that he doesn't know what he's doing, or maybe he doesn't, but at least he's honest about it. I sit there and I watch Mo, like, let me tell you why, because I'm smarter than you. Like, bro, you're not smarter than anybody out there. He's not even particularly intelligent.
Yeah. Yeah. And we have someone saying that they've been like that since day one.
Andrew, I could have missed it. You could be right. I don't know. But yeah, I mean, that's when I kind of turned a corner on them. I let things go. Maybe I shouldn't have, but whatever. It is what it is. I mean, it's like, what, my 800 subscriber channel is going to have an effect on Everything Money?
Yeah. I agree. Yeah.
I would love to see you tune Mo up. Him just walk in there going, I'm gonna beat the crap out of this guy, because he's probably one of those guys that thinks he can beat the crap out of people even though he's never trained a day in his life. I'd love to just see him get in there with somebody that boxed.
Yeah. I mean, there's so much to say, like, but EM was a, back when Austin was still on the show, that was always a topic of conversation, how EM was pretty cringe, because Austin was one who got me into this whole YouTube thing in the first place. And there was someone else, Lafufu, out there, but then there was like, oh, but these guys are good. It's like, no, these guys are I mean, it's just like there's these old stuff that Paul has. I don't know if you know that. His old writings, they're hilarious. They're
from Everything Money?
Yes. Oh my God, he's been on the internet for a long time.
Has he?
Yes.
What was he writing about?
Amazon, Carnival Cruise, Intel. I don't know about Intel. Wait, scratch that. But definitely Carnival Cruise, shorting Amazon, shorting Facebook, stuff like that. Phenomenal stuff.
Well, I mean, look, on the whole shorting thing, I don't do it. I don't really know what's involved in it. To me, it's gambling. I mean, if somebody really knows how to short, maybe you could moderate my opinion on that a little bit, but it's like you're trying to predict something that's unpredictable. Oh, you think the market cap's going to fall? You think it's going to fall in value? Okay. Well, I mean, stocks are irrational. They can do anything. Yeah, I would. Yeah, there were times where I would just do a quick DCF, and I was like, I think your estimates are too high. But I mean, I don't know what assumptions he was running at under that. It's just, the hardest, in my opinion, one of the hardest things in investing, and I made mistakes. I'll admit it. I don't know why on Baba at one point I projected 20% per year. I don't know why I did that. That's stupid, and I never should have done it.
Maybe because historically,
I think I got caught up in irrational exuberance too. I got caught up in it. I mean, it's a really difficult thing to see like what the market's done in the past couple of years, and then just keep yourself up. I don't know where I was going with that, but
no, that you got to be careful with. The assumptions are what's really important. It's like, what does the analysis go into to determine your assumptions? Because you got to be very careful with that. You're putting, if I say Alibaba or whatever, well, I say Tesla's going to grow at 1,000% per year. Oh yeah, sure, it's a buy. Of course it is.
That's why the first thing I like to do is run the numbers now. Like what is the actual growth that would justify its current price? If you look at Oxy, I think I looked as like 3%, which I'm like, there you go. Your growth could be based on inflation.
I will tell him about Bam and Oak Tree. I see someone's asking me to tell you about that. But one thing I'll say about Oxy is because I used to have an oil position and I did pretty well on that. And
again, I'm going to use this reference. 2020. Chris and I both talk about this offline.
Done it.
How mad we are at ourselves for not just buying the energy ETFs up like they're going, oh, we're going off oil. Cool. I'll take all of that. Give that to me.
Yeah, I have a relative who went really heavy in oil. He's doing really good.
Oh God. I can only imagine. There was a point where I think Exxon had a 10% yield.
Yeah.
And on that alone, I should have bought it. In a tax advantaged account, of course. But
well, he's formerly worked at Exxon. He was pretty high up. So he already had like I guess he had more intimate knowledge about Exxon because he worked at Exxon specifically. And he was buying it up like crazy at 10% yield when it was close to there. And he called me up. I remember that conversation. But anyways, we're not talking about that. So yeah, with ConocoPhillips, like the reason why I got out of it is because at some point you have, prices of energy can rise up to a point, right? Price of necessities can rise up to a point. And that's been like the theme of this year that on Capital Mindset, I've been talking to everyone here on live streams, on videos about what I call liquidity crunch. But one kind of aspect of that is this kind of conversation we've been having around at some point consumers reject the price. It's not because they want to. It's because like you just can't do it. So energy has kind of caused its own issues elsewhere. Food, energy, housing has caused its own issues elsewhere, and discretionary expense, stuff like that. But
on Oxy too, it's what I brought up earlier. OPEC said today they're going to reduce supply. So yeah, energy, and this is something, I mean, we all have to factor into our decisions. Energy, the cost of energy affects every product we have. And you're right. Like I'm a pretty stingy person personally. I mean, I partied big in Austin and spent way more money than I should have. But it wasn't like, I'm dropping 10 G's in the club. It's just I'm stingy. So, you're right. I go say there's like a widget I want at Walmart. I mean, if I come in and I'm like, well, this thing was $10 a week ago and now it's $40. I'm not giving you $40 for that. It's not worth $40 to me.
Well, okay, so there's kind of like another set of stocks that you can kind of look at for this, but one of the things that why I kind of wanted to take my profits from oil at the time I did. And everyone can go check out the very first video where I said I'm starting the process of exiting oil. Just look up ConocoPhillips, selling ConocoPhillips capital mindset. You probably find it. Posted in the first one was in February, and then successively I would talk about it in other videos until I was finally out of it. But the gist of it is, you know, OPEC is probably seeing for the next year or so, there's probably going to be a severe amount of demand destruction. Take a look at, well, I'll just pull up some of these stocks for you. Take a look at some of these that are heavily dependent on the input cost of energy. Because energy, to a huge extent, is, for example, downstream of this.
Mm-hmm.
So these guys are kind of giving you like a little bit of a warning signal that, broadly speaking, the global economy is looking to take a little bit of a nosedive. And you see, look at this multiple right here. It's really cheap, right? Oh, but hold on. The market's telling you something here. That's what I've been telling everyone. The market is telling you something here, clear, cut, and dry. And it's not. We talked about this in the chemical video where I wanted to actually buy some of them, and that in coming into the future, I think there's going to be interesting opportunities in this space because they're going to be thrown out.
Eastman Chemical, I'd have to go back and look at it, but that is something I've been looking at, and I'm like, why wouldn't I put some money? They make chemicals. Everything in life depends on that. Everything in our modern world.
So then that's a good premise to begin with. And then then my follow-up question to you is, what would the market be telling you if it's depressing the stock price of Eastman Chemical? Because you're right, and I'll pull it up here. So this is Eastman Chemical now.
It just tells you that the market is anticipating lower demand.
Exactly. And then what does that mean for energy?
Yeah.
Demand destruction.
And that probably is OPEC's reasoning behind it. I didn't even think about it. That's why I like talking to you. Sometimes I'm like, yeah, I'm thinking something, and then you just say it, and I go, oh, dude, I should have known that.
It's all like little pieces that up. But yeah, demand destruction, that's kind of what was my concern with staying in oil. While retail was like, you know, getting really excited about oil, I was like, oh, because up to a point, right? Then things start to break, as we say. And then the war was like the cherry on top that temporarily allowed me to even get even better prices, way better prices than I thought on the exit positions on oil. But that kind of exacerbated the later down the road, that kind of concern about demand destruction. And
Fabio, all I was going to say is, if you want to look at it that way, now we have two indications of what's going to happen, which is what I suspected was going to happen. Like, you remember, we were all talking on the REU rabble about how the Fed needed to raise interest rates and that inflation wasn't transitory. You know what I mean? These are just guys that are hobbyists, and you look at the Fed and you go, how do you guys not know this? And then, you know, again, when inflation has been above 5%, the Fed has never engineered a soft landing, along with this market information, which is why when I watched the Sven Carlin video on Google, I was looking at him and I go, okay, you're saying to buy it at a 19 price to earnings ratio, bro, but are you, and I'm not saying you're wrong because only time will tell that, but are you not anticipating what's coming? Because I think you could end up getting Google cheaper.
Yeah, probably. Let's talk about Sven, because Sven, well, I didn't have any opinion really on Sven before, but I think like more recently, I don't know. Sometimes he does like a coin flip analysis. I feel like it is.
Yeah, he does.
We know, if for anyone not knowing what a coin flip analysis is, I don't know if that's an actual term, but it's basically how I describe it is someone flips a coin and then they said it's going to land on heads or tails. It's like, oh, so insightful.
Yeah, I mean, well, this is another mistake I made. Not paying attention to the story as much as I should have. And all the run up. Because, you know, story investors will criticize fundamental investors for ignoring the story. And I do think they have a point. Because, I mean, think about it. You got to critically think. Like, what are we doing here? Well, we're looking at, I don't know, some chicken bones going around, and we're trying to infer what it means. It's like the market is anticipating lower demand. We can see all that, but it's, what is going to happen in the future? I don't know.
Yeah, exactly. I mean, because I'm an optimist. I think like coming out of this in the next couple of years, we're gonna be good. But I'm not thinking like, yeah, Google will go bankrupt very soon. They didn't hire me. My last interview I failed because the
I know, I
interview
love his comments, dude.
Elemental.
I tell Elemental all the time. I legitly, when I write LOL, I'm legitly laughing out loud at your comments.
Wow, that's crazy, Elemental. Well, Elemental, you're at a good company now, so. But yeah, there's.
And one thing, Elemental, if you really are 6'2", 240, I'd love to see you smash Mo. I can't mess around with that. I'm 5'11", like 175 pounds. I'm not in the big enough weight class.
Yeah.
What were you saying, dude? I'm sorry before I.
No, you're good. I'm thinking like because now my brain was thinking about Alphabet. But
we were talking about Sven though.
Yeah, in that context. So, what are your thoughts? What's going on there?
I don't know, man. Okay. If you really have a PhD in finance, I shouldn't really be able to pick apart your logic a lot of times, is my opinion on it.
Where did you get the PhD?
That's what he says he has. I don't know if he does, man.
No, I'm saying also, I think, well.
Yeah. Oh, I see where you're saying. What college did you get it from? Yeah, but I mean, I don't know, man. There's certain things like, I forget the guy's name, but I did the video on it and I would have to watch more of his stuff. But that dude, the New York City finance professor. But I mean, in just listening to a few of his videos, I start to come to the conclusion. I'm like, okay, this is a dude I can learn from. With Sven, I kind of look at him and I go, okay, first off, I don't like the multiples you use. Why are you using a 30 multiple on stocks to calculate its intrinsic value? I mean, maybe use a 30 multiple if you want to see what happens to the stock if it gets irrationally overvalued. For me, my irrational overvalue is actually in my spreadsheet, and that's a price to earnings ratio of 25. So, I mean, I get it, but I forget which stock. I forgot which stock he did, but he used a multiple of 30. And I'm like,
that's incredible. Really?
Yeah. It was bizarre to me. I was, almost like a German shepherd looks at somebody, like tilting my head to try and understand where he was coming from.
Like 10 years out. Like he was putting it 10 years out.
I think he projected something like 12% growth. It might have been Facebook, then dropping to 7% growth. And then a multiple of 30. I don't remember exactly what stock it was, but I was looking at it was his multiples that I just go, this is baffling to me. If this guy has a PhD, that he would use this. For me, if I have a blanket PE ratio I'm going to use for fair value, I'm just going to throw in 15 or 16. But I mean, that's not actually the fair multiple for some companies. For a slower grower, it's just not. But I have to make certain reasoned assumptions. And I mean, look, if you're counting on a stock to become irrationally overvalued, I don't think you're going to have a good time.
Wait, what? Wait, Elemental. Look at this comment here.
That's funny. That's awesome if that's
wow. True. Oh my God.
So what were you going to say about Sven? I'm curious to hear your thoughts on it.
No, I feel like, well, say what you say. I mean, because we can have that conversation about the quality beforehand. But I personally feel like I haven't seen every video recently, but they're like becoming 5-minute long takes on stocks. And he's
Mhm.
asking commentators apparently to go in the comment section, give him a stock, give him the thesis behind why it is they want it. So then he's basically just gonna be repeating the thesis, it seems. I don't know. And if he likes one, he'll make a video on it. So using his vast network, he's I guess doing that. But yeah.
Well,
So
the comments he made about index funds also are a signal to me. Like,
well,
you know what I mean when I say it's the point of what we always say on here with index funds. For the average, like Sven talks about how crap returns, whatever, and I go, okay, Sven, if you really do have a PhD, you don't have a job, so you have the time to sit around and pick stocks. A dude that works 40 hours a week doesn't have that time. It's not the most efficient use of his time. And especially since the average person isn't into this, so they're not going to learn.
most people are not freaks, no.
You know what I mean? Most people aren't going to sit around reading The Intelligent Investor, whatever book, that you want to throw out there. They're just not going to do it. So it's like it's best to just say, hey, max your tax advantage accounts with low cost index funds. If you want to play stocks, learn, but understand you can also lose your money. So don't put any amount of money in there that you're not willing to lose.
Yeah. Yeah. I mean, but also like he has to kind of make the sales pitch because that's kind of what he provides as a service, a research service. So, I mean, the incentive is there for him to do so. And I noticed that he's been kind of getting angrier at criticism. And I think like
Yeah.
if you're going to be on YouTube and you have like 200,000 subscribers, I feel like you gotta be able to take it, right? That's my opinion. I don't know. Maybe I'm wrong.
Yeah. Sven should try bombing at an open mic.
Yeah.
And the horrible shit that gets said to you. You know what I mean? Like, yeah, you're right. Like, he does seem like he's getting angrier about stuff. He made a comment that cracked me up. He was making fun of Kathy Woods.
Yeah. Well, I feel like Kathy Woods is easy to poo-poo on now, but she's always been easy to poo-poo on because people forget that she's been through this before. She's literally done this in the 2000s.
Mm-hmm.
So she's
I didn't know
back.
that. I didn't know that till you told me.
Yeah, no, she's back. Like she's been through this before, but people forget. Yeah, I know that, Fuhad.
Here's what I think will be a good thing for the market, and I've said this for a while too. I think the stock craze is going to diminish once we're in an extended bear market. Because I mean, the people that were casual, they're going to leave.
Oh yeah.
I might be talking about whatever's in the news, but I'm still going to talk about the markets, on my channel. But I just don't think a lot of these people are going to be around if they want to continue. I just don't think it's going to be as lucrative going forward, is what I should say.
Yeah, and it good. Good. It's not as lucrative going forward, I would say, because I don't know. Maybe some of the I'm always of the opinion that YouTube will kind of clean itself. Well, I have faith, I guess. Maybe my faith is misplaced and I'm completely wrong in that. But I had like a feeling or a belief that YouTube would have a self-cleansing, that people would be capable of kind of seeing, okay, who's talking about what, who has what interests, etc. But maybe I'm wrong, right? Because I don't know. Okay, I'll say this one thing. I'll say this one thing about this one person. That Andre guy is, oh my God, he's so dumb. Sorry, that's it. And he's got like 2 million. So I'm just like, all right.
Well, look at what his content has turned into. Cookie cutter BS. And when you listen to those guys talk, I don't understand how they were big. We talked about it. It's like one way I knew Andre didn't know what he was doing is when he bought that house with his YouTube grift money. I go, you bought a $1.3 million house. You do realize YouTube could go away tomorrow. You could just say the wrong thing and YouTube just decides, you know what, we don't want this guy anymore. Then what are you going to do? Go perform magic tricks on the side of the street to pay for your $1.3 million house? It was complete reckless idiocy.
We got someone who's trying to be a realist to me, though. He's trying to bring me back into the real world. I was trying to be optimistic.
No, I agree. I agree with you, Lewis. I agree with you. I had hope in the beginning that when we started pointing out the problems with Lafufu and Meet Kevin, I had high hopes. Those high hopes were crushed because Kevin, goes and does the dumbest thing he can. He tries to time the market, and then instead of if he believes in Tesla, putting it at an appropriate weighting in his portfolio, he puts it as like 100% of his portfolio.
I mean, though, I don't know what price he got back in though, but I mean, it's up 912% the past 5 years, Jay. It's going to go up another 1,000% in the next 3 years.
Probably. I mean, I'm the one moron out there. I'm the one moron out there that just doesn't understand what you're talking about. Like, to meet Tesla's demand, they would have to produce 3 times the lithium that's currently available.
Yeah.
I mean, it's like I said, we're all switching to electric vehicles. Oh, are we? Have you actually looked up at the amount of materials it takes to create those batteries? So again, you think you're getting clean technology, but you're really
not. I joke sometimes with my friends. I say, I had the option before me. I could burn a forest or buy a Tesla. I chose to buy a Tesla.
Bro, there's nothing. I honestly, I think Teslas are good cars, man. And it's like when I've been looking at Tesla recently, I'm like, oh, this looks like it could turn into a good. When you look at it now, the problem is just the valuation. If you want to buy it at that, great, go ahead. I don't. To me, it's overvalued.
Yeah.
I'm not. Yeah, I adjusted my rules on stocks downwards on what I'm willing to pay. I'm now coming to the conclusion that you shouldn't pay more than 12 times free cash flow.
I'm kind of I've been pretty boring. I was going to wait. I can talk about like basically what I'm kind of buying now, but I was going to do a portfolio update, but I'll still do a portfolio update regardless. But I'm pretty boring as far as like when I'm buying. I don't have 12 stocks to buy this month. 3 different stocks to buy next month. It's because I've kind of just been nibbling at. Well, actually, I think I've had a pretty active 2022 and 2021. Normally, it's not this active, but more lately, I've been more active. I'd say actually. So correction on that, but
this is a time to be more active.
Yeah, that's kind of the thing out of necessity because well, some of it was accidental because I got back into banks and got out of banks kind of like as an accidental trade. There were some trades that we did this year. So there was NCR.
Okay.
And then there was Foot Locker. Those both did really well. But NCR, by the way, for those of you guys weren't paying attention, NCR crashed again. And I will be talking about it, but that's NCR now.
Foot Locker, the last time I looked at it and what I thought is it might not be a bad play because of the financial engineering temporarily raising the price of the stock.
Mm-hmm.
I was like, that might not be a bad speculative bet on a company that I really am not interested in. Because, I mean, for me, I'm not into sneakers.
Well, I didn't hold Foot Locker for very long. It was kind of like just a fun little play, and it turned out really well. but I don't like the company whatsoever. And I was very clear in the video where I said, oh, I'm going to buy some as just kind of for fun. And it was only a small amount because it was in the speculative side of the portfolio, but terrible. I'm 20% in Foot Locker. Okay, I just said that and Elemental saying I'm 20%. Well, I mean, okay, never mind. So I hope it really it moons.
Look at P. Morton's comment because that's brilliant.
Actually, no, it's actually been doing okay. No, it's actually done pretty well. Should have. Well, no, it's basically back. It's back where I sold it at. So,
you sold it at a pretty good time though.
Where's P. Morton's comment?
Tesla right here, recently opened an Alchemist division.
Yeah.
But,
I mean,
it's well. I mean, here the problem is when you're factoring in, you're like, oh, I bought this company. The price I paid for it is whatever 35-40% compounded annually. However, you're figuring that out. I mean, if that's your baseline, I don't really think you're paying attention because anything can happen. And like a lot of these fanboys, this is what I pointed out in the beginning about Tesla. How many of these fanboys are going to sit around holding this stock when it just doesn't keep going up? And for how long are they going to do it?
Yeah. I mean, I think, I don't know. I don't have an answer for you. I don't know how they can.
No, but it is. I mean, it's like, dude, and that's not to say. But I mean, when I was doing my videos, I was hoping I would convince some of them to at least take some profits off the table. But I mean, it just turned into a cult, and look, Tesla could turn out to do everything that people are saying it's going to do. I just don't believe that at current valuations. And I just sit back and it's not for me. If you want to buy it, go ahead. I don't care. I'm just telling you, when I do a cash flow, this is what I think the intrinsic value is.
Yeah.
If I had a formula that perfectly calculated intrinsic value, I would still want to buy under the intrinsic value because that's buying $1 for 50 cents or however you want to look at it.
Yeah, that's the theory behind it. Yeah.
If you calculate perfectly intrinsic value, you don't want to buy it for that. You want to get it for under that. And so, I mean, I just don't believe because it's like anything can happen, man.
And as a good rule of thumb, right? You're not going to sell a course, let's say, to find out that or show everyone else how to do that because that wouldn't make any sense, right? If you had the perfect formula.
Yeah, no, I know. Yeah.
The courses is chump change.
Well, yeah, obviously. I mean, yeah, I said that earlier. Honestly, yeah. It's like, oh, you can perfectly, exactly which stocks are going to 10x. Yeah. Okay. Well, here, let me make YouTube videos so everybody ruins it for me and I get a lower return. Yeah. I wouldn't, if I had that, I wouldn't tell you till maybe I was completely done, buying up my position. Then I would tell you. Then when it shot up, I just sell it and put it into index funds.
Well, I think that's the problem that comes with size because that's something I was talking to. We spoke about briefly a while ago. Eric, investing sucks, because we were talking about the issue with talking or showing. Like basically, let's get to a scenario. Like let's say you are a very large YouTuber, and let's say you do make money primarily from your investments, not from selling the courses. Because let's say that's the scenario, right? Well, that makes it a little bit more difficult because you're gonna be kind of pigeonholing yourself or not allowing yourself to think about buying other stocks unless you just don't mention that you're buying those stocks whatsoever at all. Which I think maybe that could be reasonable. Like you're not going to ever mention it. For example, like you're not trying to pump it at all. You just never mention it. You just buy it. You don't even speak about it. I think, like for example, I still do that with instruments. I like, for example, because if I think for TTT was an instrument I was involved with, but not really, I don't show that in the portfolio because that's an instrument. I don't show options within the portfolio because that's an instrument that, first of all, I don't even want to even come into the realm of encouraging someone to kind of get involved with them. because they are dangerous, in my opinion. Even like TLT. Like if I end up choosing to take a position in TLT, I'm not gonna. I might mention it like briefly if someone asks, but I'm not gonna show it off. Like say, oh, look at this, because it's an instrument for the most part. People shouldn't even be involved in. So then there's that aspect. Then there's the aspect of like, yeah, maybe you can't get involved with these smaller companies. There's a company right now that 100% that I've done really well in, but if I was a million subscriber YouTube channel, I wouldn't, if I talked about it, first, that'd be a big problem. Okay. And then two, maybe I wouldn't have been able to build out the position I did. And that would have been a bummer. That actually would have mattered to me. But
yeah, no, I mean, first off, if I thought I could push a stock, whatever I was buying, I'm not telling you until, like you said, my position is complete. Okay.
I wouldn't even talk about it. If I think I can move a stock, I'm not even going to mention it.
Oh, if I thought I could move a stock, you're right. I wouldn't. It's like you have a large enough YouTube channel to move Planet 13, Jeremy.
I'm not even. Like, I'm not going to mess with it.
Let's talk about it. And the hilarious thing is I had a guy who recently subbed, and he goes, "Man, I can't believe how many right calls you made. How'd you do it?" I go, "Logic, in that it didn't seem right to me." I go, "It's really not hard to predict a company in a niche market like Planet 13 that is share diluting trash is not going to turn into the next 10x, or BioNano." You know, it's one of the things I loved pointing out about in that video was I did love doing reaction videos on BioNano where I was listening to Invest with Henry break down.
Who is that?
He's a clown who claims he's an analyst. He was talking about BioNano and its future, and I let him give his pitch, paused it, and I go, "I bet you this guy can't even tell me what CRISPR stands for," right? And I said, CRISPR stands for clustered, regularly interspaced, short palindromic repeats, and the Cas9 is a Cas9 molecule. And then I pointed out in the video, I go, "How do I know that? Because I'm a nerd and I'll read about this kind of stuff." One way I knew about it was from Rogan's podcast, but I go, "Do you want to know what my actual understanding of that is?" Nothing. Nothing. I know that, but and that was my point about what this guy is doing. I go, "You're sitting up here giving a complicated science breakdown on what this does with no understanding, and you're doing it with a speculative crap stock."
Oh, I mean, let's look at CRISPR. There was a stock that.
Wait, bring up BioNano real quick.
All right, what's BNGO?
I don't know.
Yeah, it's BNGO.
Yeah, it is. Okay.
I'll show off a stock that I did talk about, which was a way for investors to get exposure to CRISPR in a more responsible manner. I'll see if the chat remembers it. I'll give you a chance while we're talking about this stock. Go ahead and put the ticker in. If you guess it, I'll call you out. Bionanogenomics. So this one, oh, it's up 7% today, Jay.
I was wrong.
Yeah, you're wrong. Up the 5-day chart. StockMo says is the most important chart, 17%. 1 month, 6 months. I'm scared. Year to date. No. Oh no, 1 year. Oh no, 5 years.
Yeah, here, how did you know? Well, I didn't even need to look at the fundamentals. Let me just look at this. Okay, not interested.
My God.
You know, and it's like, that's another factor that you have to put into your investments. Warren Buffett has famously said, if I don't understand an investment, I don't invest in it. And it was so hilarious to me to hear all these people talk about how Warren Buffett lost his mojo and he's an idiot. And I go, why do I have to hear this every time the market runs up? And then he proves himself right every time.
Well, first of all, I don't even know why that's even I don't know. It's like he's already at a stage where he's done. It doesn't matter. The story's already played out. It's over.
Well, when they say, well, he didn't beat the S&P for the last 10 years ago, do you know how hard it is to beat the S&P in a quantitative easing environment? He didn't buy anything for a long time because he was like, I can't find anything I like. That's another thing people have to understand about buying stocks. You don't have to do it. If you can't find anything and you think the market's overvalued, if you're doing things the right way, low cost index funds in your tax advantaged accounts, it then frees you up to just go, all right, well, let me see if I can find anything I think might be a nice little speculative bet for me.
Oh, someone guessed it, but they had the eyes rolled up. Joe, why is why the eyes? But that is the one, the RTX.
What is this company? Is this another CRISPR company?
No. So a piece of their portfolio is involved in that technology, a piece, but they have a monopoly on cystic fibrosis until like 2035. And there was a big moment in time. I think they've done really well. I'm pretty sure they ran up recently. Wait, VRTX. That's right. Oh yeah, 302 bucks.
God damn.
No, yeah. So like there was this time period where
but that's like that's what I want. That's pretty much what I want to see in a stock. It's not that you know what I mean. Not that it goes parabolic. You have nice increases. I mean, that's to be expected running into an irrational market. But I mean, okay, we look at that and it's like, all right, well, it didn't irrationally run up. Let's look at it.
Yeah, no, and you got to understand, people are kind of spitting on the stock a little bit. Well, I think retail was like spitting on the stock. You would see articles saying how, oh, well, they're not innovating at all. The cystic fibrosis, that's all they have, yada, yada, yada. And like, well, yeah, but even if that's the case, that has a terminal value at like, because they have that dominance up until.
Well, that's what I'm saying to you on that. That is a safe bet. It's a safer bet because you're sitting there and you're going, look, ultimately what you want is a company that has a huge moat or no competition, a monopoly on cystic fibrosis till 2035.
You know who owns the stock?
I'm interested in that. If the fundamentals are right and I understand what they're doing.
You know who owns this stock? My wife has this in her Roth.
Okay.
So, because we try not to overlap as much as possible. So, like things that she'll own, like she owns Archer Daniels Midland, which I think is getting smacked right now.
It might be, but that's a food company, man.
Yeah, no, it's actually not getting that smacked. It's at 86. Actually, it's basically just kind of blipped up and recovered there. It was getting smacked like a month ago. Okay, that's what I'm remembering. Because I remember she was complaining about it the other day. I guess
everything does that. That dip right there would have been perfect to add to the position. And I mean, even if you look at it now, it looks like it's trading for a decent price.
There are some people that in the Discord community that really do like biotech. Someone's Red Vermont saying Regeneron. I haven't looked at Regeneron in a while now.
Yeah, I mean, that's the thing too about that the bio market. It's like, look, I might not be as knowledgeable as you on a subject, man. So that's why I say with YouTube, take it with a grain of salt. And I try to say, like, look, I don't know anything about this subject. But I mean, if you do, then that might be the place to look.
Well, yeah. For me, no. I usually like to consult with subject matter experts on this matter, and they kind of figure out from there, okay, what is the addressable market that the company's kind of trying to target, and then from consultation, I'm making it sound fancy, talking to doctors who are really involved in this, and seeing kind of how they feel about it. They could be wrong, right? Because they're going to express an opinion, and that's about it. But I like to do that with as many companies as possible. Like if we're talking about, for example, something in the software space,
well,
would it be a good idea to talk to someone?
That is something that Warren Buffett did, though. He consults experts.
Yeah, I mean, but that's what everyone should try to do if you know someone.
Oh yeah, dude. If I knew, like, well, I do have a friend who's a PhD in chemistry. So I mean, if there was a chemical company or a new product coming to market, I would probably ask him.
So just to answer Pete Morton, it's not for them. It's not about that. It's already happened. So they dominate all this pretty much the entire CF market right now. And so what you have to kind of look at that is that has a terminal value going forward into the future. What is that value is what you kind of have to determine. And there's not really a competitor in sight that's kind of coming up and disrupting that. So for now, so it's not so much that like you don't have to have a stupid amount of patience potential. It's not about that. It's how much can you basically make? I'm trying to make it sound better than not make it sound that bad. But yeah, it's how much money can you make from those patients. Hello, just joining the live stream. Hello, George. How you doing?
What's going on, George? Welcome. Yeah, I mean, again, like I just wrote these stocks down on my phone. I'll probably look at them and I'll probably do a video on them. Again, because of what market they're in, it's probably going to start with this caveat. Understand, I don't have a whole lot of knowledge in this market.
And Bristol Squibb. Well, I don't think those are. Just on a quick glance, I don't think they're buys now. But Bristol Squibb was another one that I did have in my portfolio, and I made a video. So you're looking at them now?
Not now, but what was I looking at them? I forget when I was looking at them. Yeah, I wouldn't go for them now, probably, but when it was over here, probably in November.
Well, I have back when Austin was still on the stream. Not the stream, the channel. We both bought the stock around this dip right here. I sold it early, but I sold it to buy Cardinal Health, which that turned out really well.
Yeah.
But I said in that video, because people need to understand sometimes, like when we change a thesis, right? And you guys can go back to that video. You guys can see exactly what I say in that video. That this company was not a bad company. I didn't think it was going to, perform poorly. It performed really well. And if you compare it to, for example, the S&P or that same duration, it performed really well. Maybe it was been better to sell something else and keep this.
Dude, what was your yield when you bought it?
I'm pretty sure the yield was close to the 4% mark.
Dude, that's great, because that yield right there, even 3 in this market still.
But I don't own it, so it doesn't matter.
Yeah. No, I'm just saying, but you got a great yield from it when you bought it.
No. You got to understand, like I sold it early.
Oh.
I'm pretty sure I sold it like, I forget. You guys can go check out when the video was published, but I sold like here-ish in this vicinity. And I took the proceeds, bought Cardinal Health instead. But with Cardinal Health, I still have a really good yield. I have a good yield on Cardinal Health. So yeah, you see George Constanza. I don't know if you were around in the channel around that same time. Maybe you were. Well, 66 is still pretty good. But yeah. What's this? Someone's talking about AbbVie. AbbVie is still a position I have, but I haven't been adding to AbbVie at all for a while, for a long time now. I've just been holding it. Thought it was AbbVie that had the most widely used pancreatic enzyme replacement therapy. Oh, you guys are talking about something else? Yeah, you're talking about something else. Yeah, I've been hearing people tell me that to take a look at Amgen and Merck. Merck was the other one people were asking me to take a look at. But, those are going to be all pipeline analysis. Like you're going to have to, like you were saying, it's all about the pipeline. It's all about what is their addressable market? What do they have coming up next? The generics. Have you ever looked at the generics, Jay? Have you seen some degeneracy?
No, but bro, here's the thing that these pharmaceutical companies too. They'll take 2 medicines that are going generic and then they'll combine them for a new drug. And, honestly, if you're an investor, that's really good for you.
Look at this. Look at this. It doesn't go any further back, but I'll tell you the history of this. So I'll give you some context. I have videos on this company on the channel, but so just so everyone knows, if you want like an actual video on this, it exists. So there's a problem here. I'm going to kind of give you the TLDR here, but this is a generics drug manufacturer. This is the merger of Mylan and Upjohn. Upjohn comes from Pfizer. Pfizer was basically like, we don't like this. We want to spin this off and get rid of it. And they're going to pile in some debt with this and then give it to Mylan. Mylan and Upjohn are going to merge and they're going to become Viatris. Viatris maintained the management from Mylan. have you heard of Mylan before by chance? Because they're infamous. They're infamous, not famous, infamous. And they destroyed a ton of shareholder value over the years. It doesn't go back this far enough, but didn't mean to do that.
Oh, no
Go
worries.
back in there. But in 2015 was like the peak of the generics. And there is a company I can use to show you this, which is Teva Pharmaceuticals, which is still the same old company. So Teva is the Israeli variant. And let's go back farther enough. You see, this is what actually Mylan would look like too.
Yeah. Why is it's not hard to predict that in that massive run up that it's probably going to revert back to the mean.
Yeah, they have a bunch of problems going on because they have a lot of competition in India, low cost providers. It's the generics market. You don't got a patent anymore. So it's a race to the bottom in that sense. Lots of debt piled on into these entities, a ton. Like Viatris is disgusting. Teva is doing a decent job. Like the new CEO from Sweden, or I think he's Swedish. I forget where he's from. I'm pretty sure he's Swedish. He's been doing actually a decent job, and I've been keeping an eye out on this because at some point, maybe it's going to be like the risks are going to be lowered, and maybe it'll be interesting to get involved. I don't know.
Yeah, I mean, well, that's a good thing to do too, is, look at stocks and you go, oh, it's not selling for a price I want right now. I'm just going to add it to the list and come back to it. It's because it's like, I don't think it will happen because I just don't see it working out that way. But Planet 13 could at some point turn profitable.
Yeah.
Personally, I think they're going to go out of business, but I mean, anything's possible.
Yeah, it's possible. Tattooed Chef could dominate the.
Yeah, everybody could just decide that they like terrible vegan food, and they're just going to pay over. They're going to pay a whole bunch of money for it, but more likely than not, as prices keep rising due to inflation, Tattooed Chef's going to have a harder and harder time.
This I actually mentioned in the video on Viatris, actually, because they actually are selling their biosimilar business, which was their growth segment, because the debt was so horrendous. So that's one thing that kind of connects with my thoughts on other companies like Wells Fargo, for example. Like, but let's kind of put a pin on that because that's they got an asset cap right now. But when you're kind of desperate, you're gonna sell your assets. But who says you're gonna sell your bad assets? Who's going to want to buy the bad ones? They want to buy the good ones, and they know you're desperate. So, But anyways, I'm talking about these guys. These guys are on the.
What somebody wants us to look at APD.
I think it's Air Products Chemicals, or no, that's not. Is that Air Products? Yeah, Air Products Chemicals. This one is a dividend growth investor's like dream. It's their favorite. It's usually cited by dividend growth investors, but
I like it. I'm writing it down.
Yeah,
I want to look at this later. It's like that's another thing. Is like, I love when people suggest on my channel. They're like, "Hey, can you look at such and such?" Because sometimes it's like, look. I don't know. There's 10,000 stocks in the world. I know of less stocks than there are that exist. So,
let me see here.
I want to see something.
By the way, if I accidentally skip over a comment or question, I apologize because we're talking and then got to go back. So
dude. Yeah, we're gonna miss some.
No, I always apologize to the audience because I try not to like skip over anyone.
Yeah, I mean, I'm just looking at the ratios to me right now on APD. For me personally, it looks good. It just looks a little bit overvalued for me. I'm not making a comment for anybody else. I'd have to do more research. It looks like something I would add to the list and say, all right, let's look if this comes at a price I want to pick it up at.
Both Air Products and Chemicals?
Yeah, I'm just looking at it real quick. I mean, I haven't even got through all the balance sheets, as Jeremy would call them.
Yes, if one of your shitco's moons, yeah, I'll do an you can I'll play it. I'll play it.
Yeah,
Definitely.
dude, in EPS, man, it's got a nice, consistent, it's got its ups and downs, but it's
It's gonna
consistent,
it's gonna be difficult to get that at a discount. APD.
probably.
There was another one, Genuine Parts. I think we talked about that one yesterday. When that video uploads, be fine. But Genuine Parts was another one that during the pandemic. That I hate talking about it because I bought it at a really good price and I let go of it way too soon. I played with the soap, so I didn't benefit nearly what I should have. But yeah,
Bro,
it is what it is.
I regret selling Bank of America stock.
Oh, Bank of America, yeah.
Like for the price for what I bought it, dude, I got it ridiculously good. And then I don't know. It could be I haven't looked at anything in over a week, so I don't know what's going on. But I had to sell it because again, I had some things that I had to do to the house. But I think everything's pretty much solved, so I think I'm good with the house now. Who's this bot?
It just keeps coming. It's nuts.
Probably sent by dog food.
Oh, whoever it is.
He's mad and he wants to infiltrate the chat.
Oh, what do you think of my portfolio? Google, PayPal, Foot Locker, Meta. Well, I don't like some of them, but I like other ones. But you see, I'm biased. I'm biased. So like Google, I'm biased, but like it just depends on like what is your allocation? When are you buying? PayPal was the one that I liked, and then it got away. I was gonna add it, and then it got away from me. But so I don't have it. Foot Locker, yeah, I don't really like that one. But Meta, I like it, but no one likes it.
I'll be honest with you.
Wrong.
I haven't ever really liked Meta.
Yeah, no one, no people don't like it. I know you've never liked Meta. You were always like, yeah, Meta, no.
Yeah, no,
like, no.
I said during when it was really overvalued, I go, I probably just have an irrational dislike for this stock. But for me, I just looked at Facebook and everybody argues with me. Okay, whatever. This is just my personal thoughts. I'm not saying I'm right. But I just look at it and I go, boy, I just don't really like their core business model. You can talk about all the users they're generating, but look at what Facebook has devolved into, man. It's basically a boomer site now. Yeah, all the metrics look well, they did last time I looked at it, but it was like there was just something about the bigger picture I didn't like, and I still don't.
Yeah, I mean, I'll be honest, like Facebook or Meta, sorry. Meta has probably Wings. I'm going to get to your comment too, but I recommend you go check out the last video on it. And then I show you the different videos in which I spoke about it. But there was a portfolio update where I sold it and talked about the management team, and it got even worse. And then that's what the update video was basically dedicated to. And I also encourage you to go check out certain videos because the analysts got interviewed on top of that. But we'll talk about that in a second. I'm going to bring up your comment so I do not forget it because more attention to this is probably better because it's a good case study on management. But anyways, with Meta, yeah, of the companies that I was considering like a core, I'd say that it's on the lower confidence scale. But there's some. So I spoke to some there's actually several that are in the Discord, but some former and current engineers on some parts that they're very, they're decently careful in what they say. But the question is, have they figured out to go around a cookieless environment? That's the thing. So the market, I think right now is pricing as if they don't, and if they haven't. So yeah, that's kind of where I'll leave it. And if they have, but the thing is, we won't find out until, let's say a couple quarters and they report, and we can kind of see that. But they are trying out new advertising campaigns because We were talking about that the other day, where for people who actually are on the using side of their advertisement platform. And, that's bodes well, but, we still have to see. We still have to see. So it's
So,
proven.
Fabio, I have an update. I'm going to have to do more research, but there could be possibility that I'm down at the truck stop earning extra money for Eastman Chemical stock. There's a possibility. I'm going to do more research.
Heck, I haven't looked at Eastman, but all right. So talking about wings. So do you know about MPW, Medical Properties Trust?
No. Is it a REIT?
Yeah, it's a REIT, and it's a company that I took a small position in. And then what happened was management was they were doing something kind of shady. Okay. And so Wings, go check out the live stream. So go check out the most recent MPW video. I show you both videos, the original video on when I talked about MPW and talked about buying it, and then the portfolio update video. So I show both in there. You can go to the live stream because that one's a live stream. And in there, I discuss why it is that I sold it. I do give you the gist of it in that new video, and I'll give it to you again now because it's a good, again, case study on it. But with MPW, the management team was trying to not disclose certain deals that they were doing with a tenant, and they ended up having to because in that case the SEC did their job, and there were some analysts that were bringing up some attention regarding some of this behavior that they were doing with a tenant, lending credit to them. And so what I recommend you do, and this is actually the call to action in that video, because I'll let you be the judge of it. So go find the information yourself, because you might be invested in MPW for all I know. And, be the judge of it for yourself. Just go on YouTube and look up MPW analyst. I don't know if you have to type in the word scandal. Actually, let me see what search kind of triggers the video to come up. So MPW stock. Okay, let me find it. And then I'll actually put the video up for you because it's pretty, let me see here. It might be this one. Yeah, I think it's this one. So the title of the video is MPW shareholders should be very concerned. So this is already after the fact, but I think it also shed light on some other concerns that investors in MPW should just be aware of. Whether or not it's severe or not is for you to be the judge on that if you're an investor. I already voted with my dollars. For me, it was not worth it. But anyways, it was a tiny position. Even if it was a big deal, it was not. Historically speaking, though, MPW has been a good buy at around 10-ish yield. But that should never be, and that's actually something we talk about, that should never, ever be your barometer of like, oh, yeah, therefore it's a buy. Because every time in the past it's worked. No, that's not a good way to do it. But yeah, that's the title. MPW shareholders should be very concerned. It's actually posted by Hedgeye, and they're interviewing one of the analysts who was having an issue with management team, and management team got pissed with him. This is like the whole drama. It's pretty jolly. So that was my call to action in the most recent video. Go check that out if you haven't. Definitely check it out. Okay, so
payment network in Brazil.
Which one? Stoneco?
Sparky just asked.
Oh, no.
On the bottom there. I don't know anything about it.
I'm not too familiar with it. I thought he was mentioning or trying to ask me about Stoneco, but
no, I don't know anything about that.
No.
and it's, again, like with some of the more exotic stuff, I'm kind of like, I just want to see how this market plays out.
Yeah. I mean, more past couple weeks. I mean, I've been kind of like standardly active, just buying and nibbling into the same positions. But
yeah, I mean, and that's it is what it is. But I mean, if you think a stock is undervalued, jump on it. I mean, even if there's the possibility that we enter into a recession, a bad one. Typically, what is the average recession? Was it 13 months or is it 18 months?
For what, sorry? I think it's
the typical recession usually lasts what? 13
I'm
months?
unfamiliar. I think it might be 18, but I'm unfamiliar.
Yeah. Okay. So 18 is jumping out. I'm not saying that right. I'm going off a rope right now, so I could be wrong. But it's like, look, man, if you determine it's good quality company and it's got great financial statements, yeah, you might be temporarily down on the stock. You're probably very rarely gonna nail the perfect time to buy a stock where you buy it and it just takes off and you're like, all right, well, I'm exiting this position, throwing it in my index funds.
Yeah. Let me see this. I mean, sometimes also people overcomplicate it as far as like their strategies. Let me see this. I'm trying to determine. Okay, let me find this. That one was published. Oh, and just to save you, I guess, even more time for that other comment, the live stream where I discussed the cells, and it was more than just that, actually. I think I cleaned up a little bit. Was August 16th, 2022, if that date helps out. Okay, so this is an interesting question. Would you choose? You have a gun to your head. You have to choose. There's no getting out of this, Jay. Okay, Airbnb or Booking.
Jesus Christ.
And if you don't know anything, even better. Like if you don't know what any of these companies do, like somehow
No, I know
you did not know.
Airbnb Booking does.
Let's assume you don't. It doesn't matter. So that's the fun of the game. But you do know. So there you go. All right, you have to choose one. All your money, your entire life savings, is going to go into it.
Oh, dude. Well, can I look at fundamentals?
No. Well, yeah, you can.
Study the market?
You can do whatever you want. But these are the only choices you have.
But I have to give you an answer right now. Because, I mean, for a real answer, I would have to look at both of them. I would have to compare them objectively, understand the market that they're in, what progress I think. Because it's like, here's the problem with Airbnb. Not everybody's going to rent out their house. Like, I don't want strangers coming into my house.
Mm-hmm.
So I don't know, man. If I had to pick my entire portfolio between these two stocks and I had to do it without looking at the underlying fundamentals and being able to do research, I would flip a coin. Because without looking at the numbers, that's essentially what I'm doing.
Yeah, I mean, yeah. If you don't have time to look.
Yeah, but that, I mean, so off the top of my head, I don't know. Flip a coin.
Jeez, man, this bot. Okay, it already got out.
Okay. I'm going to take a quick look and try and give you an answer. Okay. EPS. All right. Airbnb, preliminary look with a 54 price to earnings ratio. I could just tell you I'm not interested. There's better deals in the market. But let's see if I can figure out which one of these I would want to buy. Talk about whatever for a second, Fabio.
Okay. All right. I'll go through comments. And then Airbnb. Okay. So people are saying Airbnb is actually a good company. Booking. We have another, the lack of BAM. Okay. Fuhat's getting pissed about that. I don't know if that's a real ticker. I've personally never seen that. I'm not going to type that in there. I'm going to first verify that ticker. That is not a, okay. But mostly people are saying Airbnb, and then Slurpees. So I don't know if this comment's a response to someone else, or is that something else? Let me know. And then this is a live, not a live replay. I don't know what this means. Stranger. Are you having a conversation with someone I'm not seeing? And then F. So SoFi versus Palantir. Oh gosh. Okay, that's gonna be an interesting one. So we'll do that right after. Someone's saying SoFi, Oak Tree versus Brookfield. I'll tell you right now, Brookfield. TTCF 100%. show it on screen? No, definitely not.
Jesus Christ, I don't want to buy either one of these two.
Oh, but you have to.
I know. I'm trying to figure that out.
So-
You're asking me to do this really quick.
SoFi versus Palantir. That's terrible. But someone said SoFi.
Okay. I'm gonna on a preliminary look where I just looked at the financial ratios, didn't look at any of the financial statements. I'll take Booking over Airbnb.
Booking over Airbnb.
Yeah, and I mean we can just look at the ratios. If do you have do you know stock analysis? You just Google that.
Oh, you can share your screen. I'll just remove myself and go ahead and share whatever you'd like.
How do I do that? I'm barely computer literate, bro.
So go to hover around the bottom of the screen, and you should see an option to say share screen.
I'm not seeing it.
I
have mute, stop cam, settings, present, leave studio.
I think present. Yeah, click that.
Okay.
And there you go. Should give you the option, and I get to see it, and then I'll plug it out.
Okay, do you see it?
Did you share a screen yet?
I thought I did. Allow. Okay. Allow StreamYard to see your screen. Select window.
There you go. Yeah, now you're in the right place.
Switch USB. StreamYard?
That's weird. Why is it asking you that?
I don't know. Entire screen.
Wow. There you go. Now I see it. All right. So we are seeing your entire screen.
Let's go. I'll go down why. And again, I don't want to be held to this because I wouldn't buy either one of these companies right now. But when I'm coming down through here, Booking's metrics just look a little bit better to me. And I'll bring up Airbnb in a minute. And I mean, like, I have to base this on nothing, but I'm going, all right, price to earnings ratio, price to sales ratio. I'm looking at all those. Price to book, price to free cash flow. And then if I go over here.
Wait, whoa. It's $1,700. This stock's expensive. Andrew, what the heck? There's no way. I know. Yeah, there's no way.
What's the goddamn ticker symbol for
Airbnb?
What is it?
ABNB. Yeah, there it is.
So around the ratios. So in here, and like I said, I have nothing to really go off, but price to sales ratio is a little bit more reasonable. Price to book, price to free cash, all of that. It's just a little bit more reasonable. And then you come down here and you look total shareholder return. It's another thing I'm going to factor in. So if I have to jump, I'm jumping into that. Into Booking. And that's why. And I only got like 2 minutes to look at this stuff.
All right, we have an answer, guys. Booking.
Even if I'm wrong about a stock, I'm fine with it, but I would never just buy like that. A significant portion of money. I mean, I might do it just to see what happens, but to me, they both just look overpriced.
Yeah, I mean, in reality, guys, like that would never be a justifiable answer. Like he just looked at it for a couple seconds.
Yeah, I mean, that's why I didn't really want to give an answer because I'm like, I don't like either one of these.
That's more like for entertainment. People kind of like to just hit like ABC. Okay, so Amerisource Bergen versus I forgot what DEF is. I gotta remind myself. Oh wait, but I don't want to skip anyone else's. But I looked at DEF because I don't know. I forget what this one is. Invesco Defensive Equity ETF. Well, we'd have to see what their holdings are.
Pull it up. Let's look at it.
All right, so DEF. I'm just making sure that you know that Okay, it's a joke. All right.
Oh,
This is Invesco Defensive Equity ETF. All right, so but his was a joke. We're gonna not skip over the other people's because that would be mean for us to do. But
SoFi versus Palantir.
yeah. That's one I'm interested to hear this.
Which one of these two companies? You can take me off.
You have to,
take,
and it's all of
just
it.
something up, but
all right, no, Palantir, SoFi. Just
right.
come on. All your life savings, all your hard-earned money. Palantir, SoFi.
Okay, I have 30 seconds. All right.
Oh my gosh.
Overview.
Seconds.
Analysts buying based on what? I don't have a lot to look at here. I have
now
to
people
buy.
are using people. Like people are going into people now. Okay, I see how.
Okay. Palantir.
I'll tell you, like, it's hard. It's really hard. I think.
God damn it! It's probably help if I could spell
PLTR.
It's hard.
I'm
all distracted by trying to give you a quick answer. I can't even think.
Yeah, no, you're too slow. You're too slow. You're a price target is $10. It's above the current price, therefore buy.
I don't care what analysts say.
No, you're doing it wrong. You're only supposed to look at the price target and just buy based off price target. That's the rule.
I don't have much to go on here, so I'm going.
That's fine.
Just looking at the ratios, I'm going with Palantir at this point.
I was gonna go Palantir over SoFi, but at the same time, the bullish case is that SoFi is going to be the AWS of banking. Excuse me.
I don't think the big banks with the money they're paying government cronies are going to allow that to happen. But I'm not saying that's right, but I'm just saying that's a reality we all face.
Yeah. Okay. We won't do this one because we already did booking. And then let's see, trying to see. That one's not a real one. It's a joke. Netflix and Airbnb. That's not even like in the same place. Okay, BlackRock and Citigroup. Kind of different. Not kind of. Pretty different, but financial-esque within the realm of financials.
All right. BlackRock and Citigroup. I was looking at Citigroup before, but let me see.
I'm seeing a new comment. Slurpees is asking, are the rules about how long? I don't even know what the rules are. Okay, like no one told the rules. This is kind of just. I'm assuming now the assumption I guess from the audience is that you have to buy one and you hold it because it's a gamble.
Okay.
Bob Smith, very funny.
All right.
Yeah, BlackRock and Citigroup. So I'll kind of give you some commentary on it. So you got an asset manager and you got a bank that has a lot of international exposure and probably a subpar book. Let's just say that.
Bro, this is hard for what you said with these two companies. Initially, you would look at the numbers and probably go Citigroup. But knowing they're an underperformer, on this quick look, I'm buying BlackRock.
I'd probably go with BlackRock simply just because Citigroup of the big banks has a lot of issues, a lot of counterparty risk, a lot of issues. So,
and that's what factored in. That's why I just wanted to look at the numbers. I kind of had it in my head. I was like, I looked at Citigroup, thought about it, but there was something I didn't like.
Yeah. Okay.
So I mean, take in consideration, I'm only using ratios to try. No, it's actually kind of fun, dude. To just try to pick one in like 30 seconds.
They started doing this to me yesterday, and I thought it was like a fun little game. So they just say something, and then I have to like, so you're getting a taste of this, and it is fun. It is fun because like usually like they like like this one. All right, you can't do much thought into this. ApeCoin or APE preferred stock.
What?
Exactly. Like you can't put much stuff. Don't even think about it, Jay. Just don't think about it. ApeCoin or APE preferred stock, and you don't even know if the AP preferred stock is a real thing.
That's what I was saying. Is ApeCoin a real thing?
ApeCoin is a real thing. So let's assume APE preferred stock is a real thing. It has the
I'm
word preferred stock in it.
I'm going to probably take the preferred stock over any coin.
Boom. There you go. All right, done.
I mean, I can't do anything with it. You know, I mean, I'm not a big preferred share guy, but I mean, at least they're paying me a dividend if it's real.
All right, we have Jeremy versus Stockmo. You got to put all your money with this person. They're managing your money.
I'm going to be blowing dudes down at the cowboy station.
But which one will make you do one less do than the other?
Oh, God.
See,
Going to get shredded in the comments, but I'm going to go with Mo because he's slightly smarter than Lufufu. And I'm probably going to get owned in the comments. I mean, like, you're making me make snap decisions that I can't think about.
Yeah, I agree. We had this one, VSCO and Playboy. I forget what VSCO is, but we all know Playboy.
Yeah, I would have to look.
Victoria's Secret, yeah. Easy, Victoria's Secret over Playboy. I don't like either, but Victoria's Secret, 100%.
God, now I got to do Amit versus Keenan?
Bro, what? HD versus Low. Hold on. HD versus Low. So Home Depot
versus Lowe's?
Yeah.
Those are good companies.
Yeah. So someone actually, there we go. We got like a non-degenerate comparison. Right. Me, I don't know. I haven't looked at either really as far as the financials go. Preliminary, I think I'd go with Home Depot. Preliminary.
Let me see if I concur.
But that's without me looking at anything. All right. So, because you're kind of guiding us here. What was the price target for Lowe's?
I didn't even look because I don't care what analysts think. Like I don't like what analyst price targets don't even factor in. I do my own, and then I kind of look at other people and I try to see if what they said just makes sense. Okay, I'm not allowed to do that.
Oh my God, JP, that is hilarious. We'll get to that.
I'm going with Lowe's because I got to pick something, and the cash flow is cheaper.
Okay. All right, fair enough. I should have not said Home Depot, but good. You picked the opposite one anyways, because I don't want no bias influence.
No, man, I'm curious, but yeah, like about what you think. But I mean,
I have no idea.
I'm just looking at ratios, trying to pick stocks. Buy TTCF or put your schlong in a meat grinder.
Yeah, that's always an option. Someone else fix for you, contractors, HD or Home Depot, fix yourself. Okay, that's a good, I guess, explanation of that. Wait, we got an AbbVie and Abbott. All right,
no, I'm gonna answer this one. Chris Sane versus Dogecoin guy.
Oh God, these guys are having fun.
I'm gonna go with Chris Sane because at least he buys stocks. Even if I don't think he has a process or really understands what he's doing. I mean, Dogecoin millionaire took out his life savings to YOLO into a piece of crap that's worth nothing. That one's honestly easy for me. There's very few people that would force me to pick Dogecoin guy.
What about this? A father or an actual ape?
Oh, that is 100% easy. The ape. Don't you know about the chimpanzee experiment? Chimpanzees throwing darts, which is basically what I did with one of my portfolios in my M1 Finance account.
Oh, yeah, that's right. And you were following it. How did that do?
It's
That did pretty good,
no,
right?
it's actually not the worst performing one. It's not the worst performing pie that I have in M1. So I am so curious as to how this is going to play out. That is honestly really fun to me to just put together different bogle heads and just watch. I'm putting fun money into it, $40 a month, but it's just fun to see, okay, can I beat the market? All right, how would I beat the market? Well, I can't. I disagree with people who say you dollar cost average into stocks. I don't agree with that. You dollar cost average into index funds. Stocks you try to pick up when you can find them for cheap. So there's that problem with running the experiment. But the random number generated portfolio is my favorite one. And I just want to see how that works out over time.
I'm all about the YouTube stock index. I don't know. I need to see how that one's doing. Let me see how that one's doing. I forget. Let me check.
Oh, I think the YouTube finance craze is going to go down on history as one of the most bizarre things where just a random 19-year-old comes online, claims he's a millionaire, and starts giving crappy stock advice.
Yeah.
People fell for it.
Oh, whoa. Who was that?
On YouTube?
Yeah,
There's a lot of these guys, man. They were just, stocks are going up. I'm a stock picking genius. And then a whole bunch of people in the retail market believe these guys.
Courses?
Bro, do you remember, Chris? I did my first Meet Kevin video in like March of 2020. And the amount of hate when I went through his portfolio and I was going, this guy is clueless. More than half of the stocks in his portfolio are unprofitable. And then everybody was just like, you're a moron. Meet Kevin knows what he's doing. Okay. All right.
Someone just brought up something that's having to do with current news, and it's the Jim Cramer inverse ETF. But we'll get to that in a second because I think that's actually a good one. So I don't know if you're familiar, Discord IPO or Reddit IPO. So Discord or Reddit, you have to pick one. I know which one I'd probably pick.
I think I'm going to pick Discord.
I'm going to pick Discord.
I just don't see a real path to monetization on Reddit.
Yeah, there's a very clear one for Discord, but
I mean, that's why I picked Discord, because I was like, well, you got customers, people are paying money. Who's going to pay money for Reddit?
With because Discord, you have like Discord Nitro, stuff like that, but Discord's like a non-serious Microsoft Teams, but like I think it has a lot more functionality than Microsoft Teams. But yeah, Discord. I'd go with Discord.
Oh, dude, I've got to answer this.
Which one?
Kevin versus Kathy Wood.
Oh, okay. We'll go to that one, then we'll come back to the Jim Cramer. So breaking the rule a little bit, skipping over someone for a second, but
flip a coin.
Really, flip a coin?
I don't think either one of these. I wouldn't trust either one of them with $1.
I'd go with Kathy.
I was gonna say that more than likely, but it's tails Kathy Woods, heads Meet Kevin.
It is
actually Kathy Woods there, but I told you I'm randomly flipping a coin on that one.
All right. I'm going to make it more interesting because no one asked this. You have the option to buy Meet Kevin's stock and stock in his YouTube channel, his whole business, everything, his whole brand, in 2017, or ARC Innovation Fund 2017.
See, that's too hard because I have knowledge of what happened. Obviously, I'm going to pick ARC, load up on it, and watch it just blow up and then just sell out of it.
Fair enough. Terrible question. Now, same thing. Yeah, that was a terrible question because you already know. So you know it's getting late.
No, yeah. Wait, okay. What's the question now?
So same scenario, but right now. You can buy shares in Meet Kevin's whole company. Like that includes his YouTube all thing. No. Okay, no. Sorry. We got to do apples to apples. you buy a percentage or you buy shares in their earnings potential. That's the way I'm going to do it. So you have the same amount of capital and, you'll get the percentage that you can afford, whatever.
Oh,
Equal.
God.
I don't know.
I mean,
who are you going to go with? Who's going to make more money from their followers?
I'd go with Meet Kevin on that one because I just think I'm looking at, I just like ARC. It's like, okay, I'm gambling either way, but I'm gambling in ARC, I think, is just going to collapse and implode, right? I don't think Meet Kevin stuff is going to be anything either, but if I have to take the chance, I guess I'm going with Meet Kevin on that one.
You mean President Kevin? And then your Kevin stock's gonna moon.
What if he did become president and we're all just sitting here like, oh God, I hope the asteroid comes.
Well, I don't know. I don't know if he was born in the United States, but if he was, then I don't know. Maybe one day. I don't know. All right, so we skipped over Slurpy's comment here, but Slurpy's asking, 2 ETFs are coming out. One long on stocks that Jim Cramer is positive on, and the other will go long on stocks Jim Cramer is negative on. And the ETF represents the opposite of Jim Cramer's view. All right. So basically, are you going to go long Cramer or short Cramer?
I'd short Cramer.
But not short. Yeah, but it's not shorting. It's going
long.
I
know what you're saying. Because when I buy the ETF, it's going to short Jim Cramer's stock picks. Yeah, short Jim Cramer.
Well, no, it says they will go long. No, it's all going long, but like they'll go long the ones he doesn't like.
No, I'm going long in the stocks he doesn't like.
I'd probably do that too.
Bro, I've listened to that guy when he's given buy ratings going, what are you talking about? How are you a thing?
I think a lot of it is, though, he's more of advertising companies, right? Because that's how I feel like it is, because I don't honestly feel like he actually is like buying all those companies himself. I feel like he's just like, he's advertising those companies because they want, some excitement around their stock. I don't know.
No, I know what he's doing, man. And the reason I just tell people, because people have asked me, like, what do you think of so-and-so? I go, don't buy stock because the television told you to buy it.
Oh, I only buy a stock if the television told me to buy. I don't know what you're talking about, man.
Yeah, I mean, remember Jim Cramer going, Bear Stearns is a buy after everything that happened. And I'm like, okay, well, I mean, I would have to go and look at the financial statements. I don't know if it was obvious at the time because I didn't look at them at the time because I didn't know anything about it back then. But I mean, I'm sure there were some other signs that could have been there if you looked that would have said, this is probably not a safe investment. Chief amongst them being how much they had invested in the credit default swap market. I mean, that should have been a sign to you right there. I mean, bro, the whole, with all of that stuff, it was so obvious that I knew nothing about investing at the time. And in about 2000, when they say, oh, I called the crash. Okay, well, this is apocryphal, but yeah, I called the crash back then because I just critically thought about it and I knew nothing about it. I just go, I know they're giving out all these loans to people that can't pay back their loans. This is going to end badly. That was my logic behind the housing market.
Yeah. But
Stathis, though, JP, I mean, that's a once in a generation talent. I mean, if you go back and you look at all the stock dips going back on the in the stock market over 100 years, I mean, he called every single one.
Well, we have Tyson versus Cisco and Capital Mindset versus Strongman. High key Strongman.
I mean, I'll be honest with you. I'm going with whichever person is putting 95% of my money in index funds.
Yeah, that's what I'm saying.
Yeah, you know what I mean? So it's like, other than that, it's like I love talking to other people, getting their perspective on stocks, but I really don't want other people investing my money.
Yeah.
Okay, what are we looking at? Tyson?
Tyson and Cisco.
God damn it.
I think Cisco might be higher quality than Tyson, but I don't know.
I'm gonna tell you what my thoughts are before even looking at these.
All
I'll
right,
pick
yeah, that's
food
fine.
company over the computer company.
No, not that Cisco. Cisco, the food company.
Oh, Cisco the food. All right.
Yeah, different one.
I just thought he misspelled it. That's
No. There's another Cisco.
so looking at Tyson Foods. Multiple of 5.99.
And I'll tell you the ticker of that one. It's
hold on, just give me 1 second.
no, you're good.
Okay. What's the ticker for the other one?
SYY. Oh. Cisco, that's it.
I got it.
You've 100% seen their symbol before.
Oh, I'm sure I have, dude.
Or sorry, not their symbol, their logo. You've seen their trucks.
So take into account and take this with a grain of salt. I'm doing a 30-second look at ratios. On that, I would buy Tyson.
Because I think they're cheaper right now. Right?
Yeah, that's my
trade the premium.
Yeah, I don't know though, but I mean, yeah, it's a fun game.
That's all it is at the end of the day. It's a fun game, guys. But yeah, Cisco, from what I know, is typically always trading at a premium, especially something relative to something like Tyson, and it should. But yeah, there's also.
I'll tell anybody out there, if you're sitting there and you're telling me I'm wrong, there's a pretty good shot that I could be wrong. Like you're asking me to just pick a stock, and I have like 30 seconds to do it. You know what we should do? We should do this game, and then all of us, like on a live stream, we'll do this game. We get really, or we need to figure it out, and then we make a spreadsheet and see which one of us wins. 10 stocks.
100%.
Randomly, we have the audience tell us, and then give us the two choices. Then we go in, we look real quick, we make our choice, then we put that spreadsheet up.
We get how many options? How many total
10
choices?
stocks. 10 stocks. Right. We can do 5 or 10. Just an easy, fun. We'll build a portfolio. I'm not buying any of these stocks, but we'll put them in a spreadsheet and we'll just track who wins. And it kind of like Jeremy tried to do a strongman and he's getting crushed by VT.
Oh, that was funny. All right, so let's do that. So we'll wait for the Roo Rabble to be able to do a live stream, because then we'll have the group together for that, and then we will totally do that. That'll be fun. And we do how long out? We just sit on it for a year.
The game will be the portfolio for a year.
Okay, 1 year. All right, 1 year. Google versus Microsoft. I'm biased, but
I'm going Google right now.
Yeah, I'd go.
Microsoft's great, man. I mean, you're making me pick between two great companies. One is cheaper, so that's the one I'm going with.
Yeah, Google. There's also some nuances about where like the cloud is going, and Google is kind of adapting a little bit better than Azure right now, but that's according to some people who are involved in the cloud who I've spoken to.
One thing I like about what Microsoft did, even though it costs me money, is went to a subscription based model. Instead of you get Windows with your computer, you got to pay for certain things for a year. I really like that, because when you look at Microsoft's damn near a monopoly. Yeah. All the government programs run on Microsoft. So, I mean, I kind of look at that too, that's a great thing. But really quick, I'm going with the cheaper one, Google, because there's better odds that I'm going to get a better return out of the cheaper one. I don't know which one of those two is going to be the better performer. I like both of them. And to be perfectly honest with you, I would love to have both, I do in VT. but you know,
It's a small little, but yeah, you do. I think I looked at for example, Baba. It's like 0.26%, something like that. I'll be pissed if MSFT screws up the ATVI purchase. Yeah, I mean, I think a lot of people will. I think even I can't wait for my steel case to come in. I hate this chair so much. Oh, that's one that no one. Well, that's not really a well-known company. Steelcase versus Herman Miller. But yeah, Greystone's giving us the thumbs up. He liked our response for that. Yeah, because you're basically giving us 2 solid comments. Mm-hmm.
Yeah. No, this is actually a fun game, dude.
Okay, surprised no one brought up Amazon, but like Amazon versus, I don't know, Apple. There we go. That's one.
Right now, Apple. I don't even need to go and look because I've looked at Amazon enough to where I go, listen, whatever you're doing right now, I don't know what you're doing. I can't calculate the intrinsic value. F off. Not interested. I have an idea about Apple. I'd have to go back and look at it. Personally, I think right now, the last time I did look at it, my conclusion was wait on buying it. But again, I'd have to go back and look because I'm going off memory and I don't, you know what I mean?
Sorry. You know, so someone has the Hayworth Fern. I was almost going to get that one. I'm into chairs, Jay. I'm kind of weird.
Bro, if you know all the weird shit I'm into, like, you know, I'll just.
Whoa. What does that mean?
Not like creepy stuff, but like random things I know. Like I broke down the evolution of the American field jacket to a guy at work, and he goes, "How do you know that?" I go, "Bro, I'm a weird dude, man. I'll read about weird stuff. I don't know why, I just do it." And that's what I meant by that. But yeah, that came off as creepy initially.
Yeah, it's like I'm into. If you only knew the stuff I'm into, I was like, what? Coke versus Pepsi. So someone's asking. Well, I'll tell you for the drink
right now.
I'll say the drink. Jay will tell you the stock. I'll tell you the drink. I think for the drink, ooh, it's like it's a divided household. But I don't really drink Coke or Pepsi. But I'd probably go with Pepsi. Not gonna lie, but it's a divided household. Coke is for the weak. Yes, Julius. Oh, sorry. Wow, that was a slip. That is not what you said at all. You said Coke for the drink. Wow. Do you see what just happened?
No, I'm looking.
I read his comment.
I'm looking.
My brain read Coke is for the weak, but he just said Coke for the drink. What the heck? Oh, that's really weird how that works. I swear that's what I read.
Okay.
That means that's what I truly believe.
This one's hard.
That's true, Slurpees. Whoever ordered a rum and a Pepsi, he's right. It is hard, right? Because they're both trading at a relative premium. But okay, context. PepsiCo, you're getting a snack food business, not only drinks business. Coca-Cola, you're getting just drinks.
I know it's factoring in right now. And it looks like oh, I don't know, man. This is a coin toss on this, dude. Because, I mean, I don't know. I'm going to grab Pepsi probably because of the extra revenue from the snack business, but I'm paying a premium for it. Because, I mean, at the price Coke is at right now, I mean, even at buying it here, I don't really see it as something I would be interested in. Because it's just like, okay, what am I? I'm buying a sugar water company. Is there more productive things out there? Probably.
Yeah. I don't know. I'd probably go Pepsi.
Yeah. I think that's just, for me, that's the one I would go with.
Now, I think Typically, people prefer Pepsi, the company. I think that's like the prevailing opinion. So I don't know if we're going with the normie opinion with that, but
I think they prefer owning that company's stocks, which is why there's more of a premium on Pepsi.
yeah.
But again, I mean, like I could open up like after just looking at the financial ratios, we could go into the financial statements and I could just find out one of them is just debt laden. And I'd be like, all right, well, I don't like my company's debt laden.
I think they'd probably both be close to the same in terms of well, but let's check out now because no one brought up a new one. So let's do it. So KO and Pep.
What's the new one?
So
What is it?
KO and Pep. This Pepsi and Coke. We're gonna go check out their debt. Let's check out their debt.
Oh yeah, definitely. You bringing that up?
Yeah, no, because you brought it up, so I was like, all right, let's check it out.
Yeah, no, let's look, dude. Because this one's tough.
I'll look at KO. How about that? You look at Pep.
All right.
All right. So yeah, they're trading at $56 now. But let's see, how much debt do they got? I'm at 37 with 11 in cash.
I'm looking through everything right now, really quick. This is what I wanted to look at first.
I mean, I would expect KO to have higher growth. Yeah, they have slightly higher gross margins. Operating margins also slightly higher. Return on capital. Actually, Pepsi is actually higher. Return on equity. Pepsi's also higher. That's not a big deal. Net income margin, I would expect Coke to be higher. It is higher.
Yeah, I mean, I don't see anything in Pepsi that would really concern me.
I would say their financial position, I don't know. It's not. Yeah, it's like, it's not glaringly bad. Neither of them.
Yeah, I mean, look, the kind of return that you'll get, I mean, I don't know. I mean, this is obviously way safer than some of the other companies we looked at.
Oh yeah, yeah, it's difficult. Well, at the end of the day, with Coke, I mean, if you're looking at it, I don't know what will be the end determination, because without going deeper, because we're kind of just sticking to the surface.
We're basically staring here, trying to
Pep. Let's see what Pep on a multiple basis. Yeah, they're not too far right now.
On a multiple basis, Coke looks better, but then again, I have to factor in the food business, and I mean, Coke on quick metrics. I mean, yeah, this is tough.
Yeah, you see that ROIC is misleading. It's like 17.4% for the just now.
Yeah.
How about this? We'll do a differentiator on dividend yield is higher on Coke. Done. I'm just kidding.
No, I mean, honestly, on a quick look, I wouldn't be mad at you if that was the reason you bought Coke.
Well, it's the payout ratio. That's something else. Let's take a look at that, I guess. Payout ratio for Coke was like 70 something percent. Yeah, payout ratio is actually 67, so it's lower on PepsiCo. You're getting lower yield, but you're getting a higher dividend yield right now in Coke. I don't know. Still PepsiCo. It hasn't steered it in Coke's favor.
Yeah, like I said, I mean,
by the way, yeah, sorry, people are bringing that up. Yeah, KO, not KO, not COKE. That's the bottler, I believe.
I messed up.
Very good. Yeah, but...
I would have to think about this in all reality.
I'd still probably go with Pepsi.
Yeah, now that I'm looking at the right metrics, I mean, even the other way, it didn't really. I'm just. This one is tough. But yeah, I'm probably going Pepsi.
There's also like the Mexican variations of some of these companies. Like there's Kimberly-Clark Mexico. I believe there's even Coca-Cola Mexico.
Bro, it's happened to me multiple times where I've been looking at a stock. The numbers didn't look right to me. And then I realized I was looking at the wrong stock.
Yeah, with the same names. Oh, you remember the whole fiasco of Zoom and like because the tickers, it was like ZOOM and ZM.
Yeah. I mean, I don't know, dude. I like Zoom stock. I never even really paid attention to Zoom stock because I was working with a girl who didn't know anything about investing and was telling me how she wanted to buy Zoom stock. And I was like, that's a bad idea.
Yeah. Yeah. With Zoom, there was I mean, throughout the pandemic, what was it all-time high? Did it get close to 1,000? I think it did. I don't remember. I love
Zoom
JP.
so ridiculous. I was just going, what are you guys talking about? Why do you think that do you think that we're gonna stay in a pandemic? Also, Microsoft has all the same programs.
Mm-hmm.
And they're probably better.
They are. I mean, I feel like you get Microsoft Teams, which gives you basically just Zoom functionality. And on top of that, you get, again, chat functionality, very similar to, what's the other one? Slack.
Okay.
Some people say Slack is better, but yeah.
BAM versus Oak Tree.
Oh, yeah. Sorry. We're going to do that one now. Yeah. BAM versus Oak Tree. So Oak Tree, Howard Marks. I want you to think Howard Marks. BAM, the Brookfield Asset
Management.
Yeah. I'm telling you, it's kind of a silly question. My personal opinion, don't get mad, Fuhat, but
All right. Oak Tree.
But Brookfield Asset Management owns
Specialty Lending Corporation.
Oh, no. That one is not Oak Tree. There's gosh,
Is it Oak Tree Acquisitions? What's the ticker?
No, I'm pretty sure that that's not the case because those are all going to be like these special little entities under Oak Tree.
Because that didn't make sense to me.
Okay, he wants us to talk about BAM because BAM owns Oak Tree. They own I think it was 60-something% of Oak Tree. So he just wants us to talk about BAM in general.
Oh, all right.
But it was Oak A. Fuhat's giving it to us. Oak A is the one, and Oak B. Then you put just B. Stock analysis is going to be weirder.
Yeah, I know.
No. It's going to be Oak and then B. Let me just put it on Google. Oak B stock. Yeah, so it comes up on Google. And but basically, okay, we'll just talk about it as one conglomerate. Okay, so Brookfield Asset Management, all you need to know, Jay, is alternative assets. That's what they kind of focus on. They acquired Oak Tree because Oak Tree focuses on acquiring distressed debt and basically just betting that said company's not going to die. While the market's basically betting that that company's going to die, they buy it for pennies on the dollar. If their research was correct, the company doesn't die. They make good money. So that's what Oak Tree does. Brookfield Asset Management, they will do good in a low rate environment because that's basically their competition in a big way. Management team always talks about that, how basically rates are their personal competition. As rates are low, people are going to be more enticed to put their money with Brookfield Asset Management. When I say people, not people, but basically like think pension funds, etc., that kind of thing. They'll give their money to Brookfield Asset Management, who will move their money around into various assets. They have one fund that's has infrastructure, renewable energy, stuff like that. They generate management fees. They also own ownership. It's a complicated structure. If you're not, yeah, if you've seen that, it's complicated, which makes some people get a little bit put off by it, which makes sense. But yeah, that's the gist.
Yeah, I don't know because I'm not pulling up the other one. Well, what'd you say about Howard Marks?
Well, Howard Marks, that's Oaktree. Howard Marks, Oaktree.
I'd go with Howard Marks.
It's like if you could just buy Oaktree by itself.
Yeah.
Yeah.
I'm also, I'm also smart enough to just go, yeah, that dude knows more than me. Maybe I should just listen to him.
Warner Bros. Discovery and Netflix. Don't offend me.
I looked at Warner Brothers. And just really when I looked at it, I was like, okay, I don't think this is the worst thing that you could ever do, but I kind of looked at it. I go, my choice is Warner Brothers or VT. I'm going VT all day.
But that's not your choice here, is it?
I'm probably going to end up disappointing you.
You're going to go with Warner Brothers Discovery? I mean, actually,
no, I haven't looked at Netflix in a while. I don't see, for me, honestly, I just don't really like streamers.
Yeah, they're not the sexiest. Well, they're sexy. The people think they're sexy, but they're weird. I get that. Yeah, they're weird.
Because I mean, this is my thing that I would want to see play out. Okay, so my logic is when I'm looking at the streamers, we're entering into an environment where, we're in a high inflation environment. The Fed's raising rates. People are going to cut their spending. What's one of the first things that's going to be cut out of their spending? Luxuries, like the Netflix account they have, though they never watch Netflix. They're going to be like, wait, I'm paying $20 a month or whatever it is. That's why I don't like streamers.
Yeah, and then we're getting some like Greystone saying too much competition, stuff like that. Yeah. It's yeah.
Bro, I really don't like their current price to free cash flow. One bit.
Netflix?
Yeah, I really do not like that. So my question is, I found an error earlier in stock analysis is when I was looking at Oxy, they were saying it just didn't make sense to me when I looked at the price. They were saying the PE ratio is 6.58 or something, right? The multiple. But then when I looked at the EPS they had, it was like $1.51. And I'm going, that's impossible. So then I had to go to Yahoo. And his EPS was 10 over there. And so that's also a little bit of a problem with Stock Analyzer because I'm like, all right.
And it's free. Can we complain about free?
No, I know. But some of these numbers are okay. All right, that makes sense. Total shareholder return. Jesus Christ, I don't want to buy either one of these companies.
But you must. I'll tell you, like, Netflix is more likely going to be on the chopping block than Warner Brothers Discovery for me, but it's not because I like Warner Brothers Discovery more. It's because maybe I would take my profits on Netflix. I don't know.
If I'm buying right now, I'm buying Warner Brothers.
I feel like Warner Brothers, you're taking on a decent amount of risk. You have that whole debt pile to worry about, but if it works out, probably not going to be a bad play.
Well, here's what my line of thinking is. I don't want either one of these. I'll just buy the cheaper one then.
We have AutoZone, by the way, and O'Reilly Auto Parts.
Dude, I looked at AutoZone a while, like last year or something. I was like, yeah,
Look at that. 5-year return for AutoZone is 273. And then O'Reilly's is, let me tell you with O'Reilly. I think they both followed like a very similar strategy. At 243, both have demolished the market. Demolished it. Congratulations if anyone owned it.
Yeah, and for me, man, I'm just gonna tell you a lot of times where I have to just do a preliminary look at something and grab. A lot of times the cheaper one's gonna win out. Because here's the thing, the cheaper one is assuming less risk. I mean, obviously, I could be wrong because I'm not looking at the financial statements, but if I'm just looking at the ratios, I'm like, all right, well, I don't have any available information to go off. Buy the one that's a little bit cheaper. But O'Reilly. What's the ticker symbol for O'Reilly?
ORLY. Yeah, that's something that is quickly observable. What Julius Caesar is saying, both companies have been great at allocating capital.
Oh, yeah. This one's tough, too.
It is tough.
I'm probably just going to go with AutoZone.
AutoZone. Which one's the bigger one? Curiosity.
I didn't even look.
I think O'Reilly's at. I'll tell you what O'Reilly's is at.
$46 billion market cap.
36?
46 for O'Reilly.
The heck? Oh, no, that's, yeah, you're right. You're right.
Did you look at AutoZone?
43. I was looking at the wrong one.
I mean, they're comparable in size, man. Again.
Now, if everyone is driving a Tesla, though.
Then I wouldn't buy either one of these stocks.
What happens if every single American is driving a Tesla Model 2, Model 3, and Model S, Model X, Model Y? It's going to happen, Jay. Everyone.
What do you think the likelihood that that would happen is?
0.
We had to assign probabilities. I'm going like, you can't divide by 0, so I'll just divide by 0.00000000001.
That'd make it huge.
But I'm just saying that's the actual probability that I believe that every American will be driving.
Oh, okay.
0.0000001.
Yeah, it's not going to be a thing. Not going to happen.
Hey,
definitely not.
I got to run to the bathroom, man. Throw some food on. Like, I got about another half hour in me, and we'll just keep going if you want to keep playing stock game.
Oh yeah, no worries. People who are still awake, you guys are insane. So, yeah, you guys can ask pretty much any question now. Jay has gone. We can talk smack about him, and see where this goes. Okay, so someone's asking, has Kingdom of Finance seen ACC? Well, I have not seen ACC. I don't know if he has seen ACC. Let's see here. But yes, some of these. So Julius Caesar saying they will adapt. I hope they do. Because definitely, we're going to see a full Tesla future, Tesla robots, everything. What do you guys think about the Tesla robot? Out of curiosity, if anyone wants to comment on that. Oh my gosh, yeah, you remember the talk, yeah. Yeah, let's see this. Hold on, my wife's texting me this. What about Adobe's current price? Okay, so just on the surface, I'm interested in relooking at Adobe. Adobe's finally it's come down. I mean, I hope has it rallied recently? ADBE. Yeah, it's back to 297. literally just the other day. It was 275-ish around there. Does AutoZone store sell Tesla parts? The thing with Tesla is that they're trying to be very tedious about you using third-party parts. Like they want to sell you all the parts themselves, which is a bit of a bummer. Would you ever buy Airbnb or any hotel company? We actually just talked about Airbnb versus Booking. I don't know. The hotel companies are a different animal because you basically got franchising and something not franchising, but being a network of sorts to connect owners of real estate versus people who want short-term rentals. So it's very different. And the hotel companies are kind of getting into the same thing. So yeah, OnlyFans equals prison plus fraud. Oh, I don't know about. I mean, I didn't see anything about that. Bring up OnlyFans. Yeah, I don't. Fuhad, give us some more color on that. I didn't know anything about that. But wait. What am I saying? I actually can. But what are you eating, Jay? Out of curiosity.
Making a Italian sausage, and I allow myself to eat a little bit of candy occasionally before my actual meal. I generally don't eat a lot of sweets, but
good. You should enjoy. You're making me crave like chocolate.
yeah, dude, nothing wrong with junk food, man. Just don't make it candy. Just don't make it a full part of your diet. Like, probably only a few times a week, I just have a little bit of candy before I eat dinner.
What kind of candy?
Just some gummies.
Some gummies. Oh, I'm not really like like when I say for me, the candy I like is chocolate, strict chocolate.
See, I've never been a chocolate guy. Occasionally, I just like to eat something sugary, and it's usually not chocolate.
Have you seen SpongeBob?
I'm familiar with it. I never really was a consistent watcher.
Okay, well, there's an episode, the chocolate episode. That guy is me. Yeah, people know. People who know. I mean, there's a lot of people who know, definitely.
Bro, I had to explain this at work. I said, they were sitting in work, and they were like, hey, how are you? I was in the break room, and they go, how have you not eaten that cake? And I go, listen, here's about how much cake I'm going to eat. 1 spoonful. That's it. Like, I'm not going to sit there and eat a giant piece of cake. It's like, I like sugary crap in small doses occasionally.
Yeah. I don't know if you're like this too, but when I wake up, it's by accident. So I always woke up, get to work, and then I'd skip breakfast. I skip lunch, and then I might have dinner.
No, dude, I eat 3 times a day.
Oh, yeah, what's it? Oh my God. Yeah, no, I'm really bad with that. I need to not be that bad, but it gets
Bro,
bad.
I don't know. Like, I don't, maybe it's just the way I'm built. I don't know how certain people, like, it fascinates me when Jocko Willnick's like just completed a 72-hour fast. And I'm like, you didn't eat for 3 days? I guess that's why you were a Navy SEAL. I'm not that tough.
Yeah, 3 days, I can't do that. I mean, maybe like it's possible, but like, yeah, I'm not gonna do that.
What is the manosphere?
Dude, I don't know what the manosphere is. Fuha was trying to explain it to me. You skip breakfast today, Julius? Yeah, same.
I mean, there's an occasion where I don't eat breakfast, but I try to make it rare. Like, I think the best way to start off the morning is initially with some food. And if you're really gonna skip a meal, I think it should be dinner.
Yeah, late at night. I don't know. Well, when do you have dinner? I'm pretty bad with that.
Bro, you got to remember, I work 3:30 to midnight now. So
oh yeah, what
I do is I come in and I just start making food.
Better question. How early do you eat dinner before you go to bed?
About an hour and a half.
Oh wow, so you cut it like really close.
But here's the thing: my last meal of the day is really not that big either.
Yeah,
like I really don't eat big dinners at the end of the day. I try to crush food in the morning and then at lunch. Oh, bro, 100%, man. That's what we were all saying. We were all just baffled by it. It's like, how do you guys not see this? Like, I don't know which stocks are going to do it, but when you're looking at all these things moon, and you know, we got a bunch of stimmy checks in the market.
I don't know, man. No one could have seen Tattooed Chef coming.
The thing about shorts, Lakers in 4, the thing about shorting is, I mean, it's just gambling at the end of the day. Because, I mean, a stock can do whatever it wants to. So, I mean, when there's like an obvious short, I don't know. I don't short stocks. So you would probably have to talk to somebody who really understands shorting. I said this earlier. To me, it's just gambling. It's like day trading. It's just gambling.
So for me,
Chef versus honest, I'm not even going to look at anything, and I'll tell you I'd take honest.
oh yeah, no one asked that one. Yeah. I'll tell you that there is a company that was an obvious short. There was just one problem, and it's still not hasn't gone bankrupt. I need to do the video before they do. And
okay, so guide me through. What is an obvious short? Because, like I said, I've never gotten into this. I've never even considered it. I'm probably never going to do it anyways. But I just look at it and I'm like, yeah, I can look at a company's underlying fundamentals and tell you this isn't a good idea. It's unprofitable, share diluting trash like TTCF. But I don't understand how to figure out when the market is going to drop the bottom out of that stock.
Well, because let's backtrack that, because then we have to worry about the cost of the short, and if it's feasible. Because the problem with this company is you can't actually short it, because there's not enough float even available. The guy's like an absolute genius. So he owns like 70-something% of the company. Like 70% of the shares are, not available.
Yeah.
And I called my broker, the people who I told this to, they called their broker. We couldn't find shares of short. I think one of their brokers, I forgot which broker, basically said, yeah, we found some, but it was expensive. And it wasn't Peloton. No. I want to do a video on this company alone, but the company is going to remain nameless anyways, because it's basically like this is like an actual fraud, by the way. And just
okay, that is an obvious short. If you find fraud, yeah, there you go, man.
Yes. So it's fraud, and the CEO is under SEC investigation right now. But back when, this is actually the first thing that Austin and we sent over to, so Strongman, if he sees this, he knows which stock this is. And I think you know this stock too, but you forgot right now. But or maybe you do know, don't say the name. And some of the people out there, they do know the stock. But yeah, this one was before the CEO was actually being investigated by the SEC. We sent this over to
I know who it is.
I know who it is. Because Jeremy did actually promote the stock once.
Yep, I know who it is.
Yeah, you know which one this is. So
yep, and it's not surprising at all.
Yeah.
I mean, I think, I'm pretty sure if we're talking about the right stock, I did a video on how this guy's a moron. He's a fraudster and he's a clown.
Oh no, yeah, it's incredible. And the guy's been in jail before. This is the funniest part. So that was like already like when we were hunting this one, but like the thing is, you can't short it. It's not practical. So then it's not an obvious short. So that's why I have to retract this. It's none of those stocks that you guessed. And I'm not going to confirm or deny that. But I'm going
to answer one quick question here. SDC, honest, or Corsair? Whew. Again, I don't like either one of these, but I'm going with honest, because I mean, people are going to keep having babies.
I probably actually,
I'm not going to hate you, but if you pick Corsair, I'm not hating on that.
I'd probably pick Corsair of those three. Andrew, that's too much of a hint. You're giving people too much of a hint. But it is very iconic. So Yeah, but this is like way back in the day. And actually, when I just first discovered this stock, let me see. This stock isn't down like that much, which is like still makes it like interesting if it was possible. It's only down 31%.
Wait, bro. Text me what company we're talking about. I'm not going to do anything.
All right. It's like everyone. It's this one. No, I'm kidding. Here, where are you at? That's the ticker symbol. I just texted it to you. Yeah, but it's down. No, sorry. It's down about like, 30 something ish percent from that point. But yeah, be something I'd definitely be it also makes it a little bit, there's one other caveat that makes it a little bit harder to short. Anyways, that one wouldn't be surprised if it goes under.
It wasn't who I was thinking of.
Well, we'll talk about the one I think you were thinking of. You were probably thinking of Very Good Food.
No, I was thinking of Michael Saylor.
Oh,
that clown goes and buys Bitcoin with his company's money. If I was a shareholder, I would have immediately gotten with other shareholders and instituted a lawsuit against him. Like, I mean, honestly, if I own Tesla stock, I would consider a lawsuit for Elon Musk buying Bitcoin. That's who I thought we were talking about. I didn't know. I wasn't sure about the jail thing, but I was sitting there and I go, I think he's talking about Michael Saylor. And no,
Michael Saylor hasn't been to jail yet.
I hope he does. I mean, loading up his company on unprofitable digital fakery.
I'll do this because someone's saying it's the screen because it's an endless loop. Guys, we're not trying to win any hearts and minds here. We're just trying to have a good conversation and talk. It's not about the scenery or the sets, whatever. It's about the conversation, the words coming out of our mouths. All right, so someone is saying Reed stock. So you want to look up Reed stock. Look, I love this. The endless
loop. Of crap in the market.
No. When it goes into like that endless mirror.
Do I have the right one?
Yeah, that's apparently the one. So zoom out on like the 5-year. Price target 450% increase. All right. Actually, I'm not familiar with what this company does. Or if I did, I forgot about it.
All right. We had a run up here.
Reeds. What do they do?
Off and it's steadily dropped off.
Oh, they do soft drinks and candies.
Okay.
And they're a $15 million company. My gosh.
Well, I mean, my initial thought on this is straight gambling, but if you understand the market and the company, maybe. Would I buy this? Absolutely not.
No, he's saying this is a zero. He's saying this is going.
Yeah, it wouldn't surprise me at all. It wouldn't surprise me whether. See, here's the thing about these crap stocks, though. It wouldn't surprise me if this thing got on the radar of the ape community or something and shot up tomorrow. But yeah, unprofitable. Yeah, obviously, I'm not going to buy it.
Let me see what the short interest is. It's not that. Yeah, you see, because it's not that big right now.
Well, we got a return on equity of negative 454%. Is that bad?
I'm looking at their short-term debt. Oh yeah, they're going down. Yeah.
Bro, total shareholder return recently negative 24%.
Go to the balance sheet.
Yeah.
Go to the current liabilities. Accounts payable, current debt, current portion of debt. Yeah, it's 10.39. Go to the cash pile. They're cash flow negative, so that's already out of the water.
Yeah, I know. I was going to say, what you want me to go to the cash flow anyways?
No. Don't go to cash flow because we already know the cash flow negative. But look at the cash pile. Look at the short-term debt. They got to pay. See the current debt. They got to pay that within 1 year. 10 million. 10.39 million.
Yeah, and they have no money. How much cash do they have on? I mean, cash on hand. They have. This is in millions, so they have like $50,000.
See that? I think it's like in. That might be the most up to date. That's not as up. They have 280,000 right now because that's only 2021.
Okay. Yeah. Jesus. Okay.
Yeah, they're done. I have no idea how they get out of that.
Yeah. Yeah. I mean, Debt growth 641%.
Yeah, they had to take on. So something probably happened to them. I don't know what their situation was back in the day, but all of a sudden they just got absolutely destroyed in the market. Well, not in the market. I'm sorry. They got strapped for financing. I don't know if their business got absolutely destroyed throughout the pandemic.
Total debt.
How much is available to short? I don't remember. Well, okay. I mean, I have to go on my brokerage and see. Obviously, the market's closed right now, but HMNY went bankrupt. Oh, I remember what that was. That was MoviePass. MoviePass died.
Well, I mean, this is the one right here, and we're waiting for the results, but I mean,
oh, can I show you? So scroll up a little bit. Scroll up, click quarterly. When you go on the balance sheet, use quarterly. See on the, yeah, you get the most up to date.
Yeah, I did that before. This is because I was like, yeah, this is right here.
Yeah.
This is the biggest glaring problem.
Remember, Jeremy said that there's no reason for them to dilute because they got so much cash.
Bro, people said that to me on my channel, and I was like, are you guys not understanding this company is not profitable? So it has to burn cash, or it has to take on debt or issue new shares.
Mm-hmm.
So my thing is, and I don't know, I can't remember if I said this on a live stream, or it's my opinion that it's definitely got maybe a year at most, maybe.
Yeah.
Unless something changes and they can pull off a miracle.
Because right now the walls are squeezing in because you have higher cost environment for raising capital in the form of debt, and your share price is in the gutter. So each share issuance is going to be more and more costly. So it's not a good position to be in. That they are definitely, dang, I do not envy them. I do not envy the CEO's position.
Well, that's what people didn't take into consideration about, the rising interest rates. I'm like, guys, your WACC is going up.
See, I think like they're not at scale whatsoever. Like their business is not at scale whatsoever. They are charging. Well, obviously they are, but they don't have any negotiation power with their customer. Their customer at the end of the day is the store, and then you're like the end customer that decides the behavior of the store.
I think it was in the 10K. They were dependent on 3 companies.
Mm-hmm.
It was either 2 or 3. I can't remember which. Target and Walmart were the 2 biggest ones.
Yeah, and they have all the power.
Yeah. I was like, you guys have nothing to negotiate with them.
Yeah. Good night, Fuhat.
See you, buddy.
Yeah. And Andrew Marshall says, I found Reed because it was listed as a competitor to Monster Energy. Oh my gosh. That's the one we were just looking at.
Yeah, no, yeah. What's the future of Lyft and Uber at this point? I don't know, man. I have a tendency to think that the ride-sharing market is here to stay. Will the companies be here? I mean,
in their current form.
Yeah, I mean, that's impossible to tell, but yeah, I mean, it's like right here, if this is accurate, because like I said, I found errors earlier, but I mean, yeah, right. I'm going to pay 85 times free cash flow for this company. Like,
yeah, I just find it so strange that the company is not, well, when I looked at it, I think like if they cut R&D, they're profitable already, but there's 0 brand loyalty, he says.
I don't look up these shitty companies. I'm the right Lyft.
Yeah, Lyft.
Yeah, I mean, there's nothing to hold you. It's the problem. I mean, with companies like this, and this is why I understand the potential's there for one of these companies to just explode, but I don't get it, because it's like, okay, let's say Microsoft's market cap drops by half tomorrow. I don't even need to go look at anything to go, I think I might be adding some Microsoft here.
Mm-hmm. Someone is asking, that's kind of specific to Magna International, I'm guessing, but I don't know where you're getting 30. Just tell me where you're getting 30% plus, because I've seen 8, 10. I have not seen anyone project the 30. I don't know if that's somehow pricing like the Apple car, but yeah, I don't know about that, man. 30%. Tell me who's saying that. That's insane. They're pretty mature. Speaking of dropping
analysts are pretty liberal with their expectations on growth.
Especially, well, if they're trying to sell that stock, yeah.
Yeah.
They're gonna be like, oh, this is growing at 70%.
Yeah, and they just project that because, I mean, in all honesty, a proper DCF is every year. However you want to do it, you're recalculating what you think the next year's growth is. I do mine my way because it's just easier. Because, I mean, you just want to get a general idea. And there's going to be times when companies don't make analyst expectations.
Yeah, I was like Adobe, ADBE.
I hope if I wasn't getting tired. Preliminary look, maybe.
They used to be 400, Jay.
Yeah, but it's still not cheap.
But they used to be 400. It can't go any lower. How much further could it fall?
This is a great company. Just wait, dude. Jesus, I think things are going to get bad coming up. I think everybody's going to be talking about how stocks will never recover and it's the end of the world.
Yeah, it's someone's asking to check live on Mag. Well, my question is simply, where did they get Magna? Like, where'd you get the Magna growth at 30+%?
Andrew, I apologize. Put his comment up because I was wrong.
Oh,
I stated
yeah,
correct.
A proper DCF is one that gives confirmation bias. Yeah. Like, I thought it was a buy before I did this. It says it's a buy after I did it. Therefore, it's a buy.
So now I'm going to do it. All right, brother.
Yeah, no, for me too, because I know what you're thinking. We're at 3 hours and 17. Well, when you came on 2 hours or something, but yeah. All right, guys. Thank you guys so much for
brother. Hey, I'll talk to Chris. You talk to Chris. We'll try and figure out if we can do at some point. It doesn't even need to be that long. We could just do an hour. Sit down. We'll get our options, and then we'll look at stuff really quick. But we're gonna have them give us new stocks, because if it's next week, some of these are too fresh in our memory.
Exactly, and it's got to be on the spot.
Yeah.
So, yeah. So you guys be ready for that. All right. If you guys want to participate, and oh my gosh, and let me know or let us know which ones you guys want, you gotta make it to that one.
Morning, brother.
Yeah, good morning.
We're about to end this.
Oh,
bro, if you're in Germany, my heart goes out to you.
Jap Gill, I have no idea why the heck that is saying that in Yahoo Finance. I couldn't tell you. I would be grain of salt there, because Yahoo Finance should not be the end all be all of, where we're going to get our growth projections from, because like with all these free sources, put MGA, Magna International, go to the analysis section. Let me see, MGA International analysis, number of analysts.
Okay, stock analysis says this is good for a 25% return. again, I would question where they're getting those numbers, but if I'm looking at the right stock.
There's one thing, Japkill, I immediately saw it. It's because, it makes sense now. So they're expecting in the current quarter a decline of 18%. Next quarter, a decline of 25.8%. And then basically next year, it's going to be recovery of 29.10%. That now makes sense because it's not like we're staying at a base and then it's going to grow by 30% from that base. They're expecting a fall. That's what Yahoo Finance is aggregating. Those numbers together make sense. So I was like, there's no way there's an analyst out there going like, oh yeah, Magna International is going to grow at like 30%. Well, it's 39.8% is what they have here. As far as growth projections, growth estimates. So again, negative 18% next current quarter, negative 25.8 next quarter, and then the next year they have it at 29.1, and then next 5 years per annum is 39.8. I mean, look, like it could be, but when you're taking into consideration that they're going to they're expected to have that decline, you have to reduce the base by that amount. And then if you're basically saying they're going to recover and then some, there you go. So now that kind of makes a bit more sense because they have like the 5-year average growth rate. Well, I mean, I'd be checking that at 39.8%. So Japkill says they're expecting exponential growth in light vehicle production in the future as well. I mean, yes, but we can't, take it like as law that's going to be the growth rate. But yeah, that's what I'm trying to say is the 29.10% growth rate makes more sense under the context that they're expected to have a decline of 18 and then 25. Just kind of like a recovery. All right, Jay. We did good.
Yeah, thanks for having me on, man. It was fun.
Hey, no worries. All right, I'll end the live stream. See you guys. Have a good night.
Right. Hey, I'll text Cole too. Like we gotta get everybody in on